Okay, and we're live. How is it going, everybody?
Well, since I'm everybody, you and me.
Yeah, just me and my other personalities in the room.
Better, yeah. I was sad that I missed our bonus stream. I couldn't make it, guys. Life got in the way, but yeah, it's always fun to be doing this. We had too much news last week. This week, a lot of news too. But yeah, it's been a good week, although very busy. Tevis, how are you?
Doing great. I've had a great couple of days and feeling good and glad to be here.
Yeah.
It's been fun.
Oh yeah. We got quite the show today. So as always, we'll have Q&A at the end. I do see some that we will likely get to at the end. We'll do the last rapid fire. Today we're going to be talking a lot about EV type of topics, including of course Tesla. We'll be talking PayPal and banks, and yes, those two do go hand in hand, kind of. Some macro news as well, Amazon pieces, and more. So Tevis, where do you want to begin?
Did you see the news after hours around Waymo?
No.
Okay, so news dropped after hours that Waymo is seeking over $15 billion at a valuation near $100 billion. So they're raising some more money. They're in early talks for funding, valuing the company at over $100 billion. So, yeah, I don't want to open any links because it slows down my computer, but I can just search in Waymo for you guys and bring up some insightful tweets about it. Yeah, so here we go. So yeah, Roy, what do you think of oops. What do you think of this? Waymo is in talks to raise over $15 billion at a valuation as high as $110 billion, over double its $45 billion valuation just last year, October 2024.
Yeah, I mean, this is they're expanding. They've expanded their market size as well, and I think most probably see them right now as the lead in robotaxi type of products. Though there's a lot of them out there, so we'll see how they do over competition. I think Tesla will do well, but yeah, I think we're going to see a lot of this of companies that are private right now that we're not even thinking about investing in. That look to get to an IPO at some point. And I think that'll happen with Waymo, just because what's happened in the IPO markets, a lot of the private equity capital has gone really just to the top. So the Anthropic, SpaceX, OpenAI certainly as well. And there's some others that have benefited. But outside of those names, it's been just a bear market practically for many startups. And so IPOs, of course, it's a bull market, so IPOs have done well as well. Regulation has gotten a little bit easier. Not too much has changed on the IPO side, but a little bit. So I think that we'll see a lot of IPOs like this. Now, myself, I would not be interested in investing in this. I think it's much easier to invest in Google, who benefits from Waymo. Uber, you could say, benefits from Waymo as well, rather than in this directly, if I wanted to, but I'm more inclined to bet on Tesla.
So I just posted this, and it's interesting because the news came out within 24 hours. Earlier today, I think, or yesterday, December 16th, 8 a.m., we had Databricks is raising funds at $134 billion valuation. And I just made this post, and this is why I was late, is within 24 hours, we get these two companies raising money. Databricks at $4 billion, raising $4 billion at 134, and then Waymo raising 15 at 100, as high as 110 possibly. And yet you have these cheaper alternatives. So Avride currently is valued at $4 to $5 billion. They're in partnership with Uber for robotaxis in Dallas, and I spelled that wrong because I was rushing. And let's see if I can edit. Yeah, there we go. And you also have ClickHouse here, valued at $6.3 billion, who just released this week efficiency metrics that outperform Databricks in speed and in cost. And today you can have a stake in both of these names through Nebius, that's currently trading for a $20 billion market cap. So obviously you're not getting the most well-known names in the space, but you're possibly getting some good contenders there with regards to performance, especially on the ClickHouse side. I saw an accident with Avride where somebody had posted that one of their autonomous vehicles had an accident, but then they reported that the vehicle was in manual mode. So TBD on that. But I know at least with ClickHouse, and we can go over those benchmark reports because I know you want to talk about it as a topic. You could get these companies, and this is one of the competitive advantages I think that Nebius has, because now we're seeing all of this news come out with regards to direct competitors of the Nebius subsidiaries, some of which are going to go public in 2026, right?
Yeah, they will in Nebius. I mean, like I don't know how it did today. It keeps falling though. I know it was falling yesterday too, and yeah, it's a lot of the. I'd never really like conglomerate businesses where it's not like vertically integrated and they're doing that, for that reason. Instead, it's just like, we have this company and then this doesn't really relate too much, but we have this company as well. But when the valuation is right, and for a lot of what Nebius holds, I think that's probably true. But yeah, that's the thing is right now you can indirectly invest in Google to get some Waymo exposure, ClickHouse and AV Ride. You have Nebius. And I guess if you like Zoox, you can invest in Amazon. But I mean,
Amazon owns, doesn't Amazon also own a huge chunk of Rivian?
Yes. Yeah, they do. Yeah, I ended up having a talk with a guy that I met at one of the Robinhood events who is extremely, like, he's from Silicon Valley area. He's worked for NVIDIA for many years in the past, Apple as well. I can't remember who he's with now. It might be Microsoft, but really smart guy. But he's extremely bullish Rivian. And, that's basically his argument is just, he's not like expecting Tesla-like returns, but he's like, hey, maybe over 5 years, a 5X is not unreasonable. And I think it's a good argument to have it. So, yeah, I mean, like when Waymo IPOs, the thing is, if it's a name that people actually recognize, and Waymo will be one of those names, especially where people tend to be more of an investor mindset. So that is, of course, where they started out with in California and Silicon Valley. Those tend to be very, very, very frothy for a little while. And the IPOs almost never hold the valuation. There's a few exceptions, but even in a bull market, they just don't. And so usually the better thing is just to wait, let the selling get out of the way. Sometimes if you can get allocated some shares into the IPO, that may be worth doing. Like Figma is holding, or not Figma, but Figure is holding up quite well. Figma did not, but yeah, they can fall quite a bit.
You read my mind. I was already searching that while you were talking about it. Yeah, Figma is down to the price or lower than what they were going to get bought out at by Adobe. And I believe that was around $33 to $35 a share. I could be wrong on that. The chat will let me know. But they're all the way down.
They're trading below what Adobe had offered them. So yeah, at least double check me on that. But that's that's what I've heard. So it's been a busy week. So yeah, it's sometimes that happens. Then this wasn't what I benefited. I think I had one share, and I sold it sometime after the lockup period. So yep.
So I mean, yeah, that's IPOs for you. The hype alone gets people in. The banks will make all their money, and then it'll trade at a valuation that it demands. So it's going to be the same thing for all of these 2026 IPOs, and we're going to talk about SpaceX as well because that's an interesting one.
Yeah. Well, and you know who benefits from this, Tevis?
Excuse me?
You know who benefits from lots of IPOs?
From lots of SoFi.
SoFi does some.
Wait,
there's another one.
Another stock, another company?
Yeah.
Robinhood.
Yes. Yeah. So SoFi will, be a part of the process to help some companies go public. They both benefit, of course, from the exposure as far as retail being able to be allocated. The big thing is for Robinhood specifically, like it's the short interest. They when these names hit the market shortly after IPO, shorting you can do that shortly after, pun not intended, but hey, it worked out. And so these are usually very hard to borrow stocks. What that means is that if you own the shares, and I wouldn't buy them just for this, a lot of people on Robinhood do stock lending. They do a good job of marketing that product and showing the benefits. And as such, when people borrow your shares, you're getting a decent chunk of money. But you know who gets even more? It's Robinhood. Now, they also benefit as IPOs tend to drive a lot of volatility in the market and also a lot of volume as well, especially for the major IPOs. Databricks, of course, is not going to be a small one either. It's really beneficiary. And so their net interest income, which would normally decrease, I think it's by 50 million every single rate cut that they have. It's probably not going to decrease much, if at all. And a lot of that has to do with, you can see the stock lending is just going through the roof. That it's very impressive. And we're not, well, let me pull up this too. I showed this off, I think, with maybe Tanner over the weekend, but we're not yet in a frothy IPO market. I know a lot of people might think that we are, but I mean, this is where we're at this year. So this 336 is not a small amount. Like you can go back, to 2000 and, see that it's kind of similar, but this is froth right here. 2021, when you have people so desperate to get to the market that SPACs become incredibly commonplace. There are some SPACs, but it's not. So we're more like a 2020 to 2021. Now, I don't think next year is going to do this, but it wouldn't surprise me if we see the second highest amount of IPOs ever next year if the bull market continues, because the longer the bull market continues, usually the more IPOs there are. But the other part of it is if there's major changes in certain spaces so that new businesses begin, they're created, and they have time to go through the process of being a private company, and then finally do their IPO or DPO, you see a lot more of that. And so AI is, of course, that big push. It actually surprised me, and I mentioned that last year, that we saw basically nothing out of the IPO market 2024. 2025, I would have expected a little bit higher. But yeah, next year, we're going to be above the fives. So 500, 600, 700. We'll have to see how the market looks like. And yeah, this is just going to be a neat thing. So a lot of those EV companies will certainly benefit too. So the EV companies specifically, Waymo, would you become an investor at some point?
I would rather just buy Google.
Yeah.
I get way more businesses for a cheaper price.
Waymo businesses. You get Waymo businesses.
I get Waymo businesses for a cheaper price because, like, at the end of the day, I think all of these conglomerates don't trade relative to the sum of their parts. You always have a discount because it's a conglomerate, and that's just something that I'm realizing probably way too late in the game. By holding Nebius, more than anything else, is I realized that, like, oh, wait a minute, all of these subsidiary businesses get $0 value, zero respect. It's just like, on days where Databricks is getting a valuation bump and Waymo is getting a valuation bump, and they're not small bumps, they're like double year over year valuation bump since their last raise, you'd expect Nebius to at least close green. I'm not saying like to go up 10% or whatever, but like at least close green. And that's not the case. It just clawed back to flat because it was down 3% or something today. So it's clear that it doesn't really factor into the decision making of the market. And I think once Databricks goes public, maybe you're going to see somewhat of a bounce, but it really is not, like, the market just isn't making sense right now, at least with regards to Nebius. So for Waymo, I'd probably just own Google. It's the safer play because I think Elon was talking about this in the past as well. Like, Waymo is burning a lot of money. And we saw, we have so much to talk about, man, because I want to go diving deeper into these topics. But like, we saw also iRobot go bankrupt. And it's like, well, yeah, like, you have these businesses, they burn money and they get bought out by a parent company that has deep coffers and they can afford for them to burn money so that they can capture more market share. And in lieu of that, a lot of these companies are not companies, they're projects, and they're projects that will run out of funding and crash and burn. So that's my long-winded answer, just to say I'll buy Google instead.
Yeah. Well, and that's kind of the beautiful thing, though, of the public markets is if it's a project that's just a project, they don't actually make money. They're not a legit business, they might IPO, but as they dilute, as they raise more and more money, people eventually just say, you know what, I'm out, or it goes to zero. That can happen too. So yeah, I agree with you on the EV space. Now we had some Tesla news that is somewhat related to this as well. Let me pull that up right quick.
Well, we did have some other Tesla news that they're through all-time highs,
Yeah,
and yeah, congratulations to all Tesla holders, because we'll see where it goes. But generally, when Tesla breaks all-time highs, it's there's probably a new high coming before it retracts and it forms a base.
yeah, and it's for me. You own Tesla, a decent chunk of it. I know it's smaller than it used to be for you. Me,
Yeah.
it's such a small amount. Like it doesn't really matter almost. So, but yeah, I'm continuing to hold on to it. I just wish it went the other direction so I could have bought a lot more. But the valuation doesn't make sense to me. But people are betting on robotaxi and stuff. We'll have to see what quarter 4 looks like. So this is one of those not really pieces of news necessarily, but just they put it together. This is a projection from Cox Automotive originally on Sherwood Media, showing based on November's data point that Tesla, their market share actually, it looks like it's going to be climbing substantially in quarter 4. Now we'll have to see how everybody else reports. Now, year over year, of course, quarter 4, they're going to be down on cars just because that EV tax credit pulled forward a lot of demand as it expired in quarter 3. Quarter 4 is usually the best quarter for automotive companies and deliveries, but this one won't be. But the question is how much is baked in? Well, Tesla's trading all-time high. I don't know. I never really know how that stock is necessarily going to move until it just gets way, way oversold or way, way overbought. But this is really interesting. So Elon kind of alluded to this when the tax credits were, they were talking about making those expire. He said, well, Tesla would benefit from this. I think that it's still not beneficial for Tesla just because the main person that they're trying to capture, I think, are those that are driving industrial combustion engine vehicles rather than other EV competitors. But for sure, this is going to cause, and already has, I think, consolidation in the space. So did this surprise you at all, Tevis, or is it just a blip and it's going to keep moving down?
Not really surprising. I mean, this is EV market share. This is not like total market share, even when you count ICE vehicles. So it didn't really surprise me that much. We also have Ford news to talk about because that's kind of related to this, or at least the forward-looking version is related to this. Again, I think for Tesla, the story has been that Q4 is not going to be the greatest from a numbers perspective, and that they're going to recover in 2026 and beyond, especially as the robots become more of the story. In terms of the market share in general, like a lot of the growth is international expansion as well across their Europe presence and their China presence. So, and it's not like it's just a blip, I don't think it's going to be a massive sustained, like, oh, they're continue to capture more and more market share. Just naturally, as you have more competitors in the market, Tesla's going to fall as a percentage of market share as these companies continue to survive. But are we going to have more competitors in the market? Because, like with Ford, for example, it's TBD. So go ahead, Roy.
So yeah, news that broke today: Ford is writing down almost $20 billion in investments, and they're just not going to produce the electric version, the F-150. I know some people actually really enjoyed and like that vehicle, but for the most part, most of the mainline manufacturers are realizing, you know what, maybe we need to rethink our EV investments. Part of that is, of course, the what happened with the EV tax credit being expired. But I think there's a lot more to it that they thought, hey, just because we're great at making cars, we're great at making EVs, not usually the case. There are some that I think are decent out there, but overall, if you're looking at quality, you look for an EV manufacturer for the most part. So, but it'll be very interesting to see if this wave continues over time. Now, this isn't them, by the way, stopping producing every single EV, just a certain type, but that is a lot from one of these legacy companies. So I expect that we'll see a lot more consolidation in this space before time is through, that and then a lot of the legacy manufacturers will maybe rethink some of their products and projects and just maybe have one or two lines that are EV type of vehicles. But
Mhm.
yeah, we'll have to see how that plays out. What do you think?
So do we know why they're doing this? Like, is it just they see that this is not sustainable going forward and they're making a business decision? Because if that's the case, then you would think they would have done this calculation beforehand, right? So I'm just not sure what the backstory is here. I'm not well versed enough with the story.
Yeah, I my understanding is they've not made any money on the product at all. Which, if you're in business, you eventually want to make money on your products. They thought that this was going to be one of those where they, well, like Wright's law, that the more you manufacture, every double you manufacturing, about 20% savings in terms of COGS. So the problem was on the demand side that the demand just wasn't there for this product. They didn't sell nearly as many as they were expecting. Of course, the EV market, we went through close to a recession, maybe a recession, depending on how you define it. And of course, interest rates are substantially higher too, which isn't great. I also think that a lot of the EV products, the F-150, I heard better things. It's a little bit surprising on that, but usually people were let down by those. They might initially really enjoy those versus like a Tesla, dude. I mean, I drive two Teslas for a reason. It's not because I'm like, oh, I own a tiny bit of shares. I better, but no, it's because I think it's the best EV and it saves us a ton of money on fuel because we do a lot of driving. Plus, it's fun. It's a great vehicle, like bang for the buck. Nothing better, especially when the EV tax credit was there. Now that it's not, I'd have to shop around a little bit, but I have a tough time seeing us buy a non-Tesla like anytime soon. Tesla would have to really go downhill, and I hope that doesn't happen. Yeah, I think it's mostly on the demand side. It wasn't there, so it didn't make sense.
I agree with this.
Oh yeah. Like that's Rivian's play with the R2. We'll have to see how that works, but and the R3 is just weird for them. But no, yeah, there needs to be a lot more variety out there rather than just let's have the exact same vehicle and just make it an EV. Didn't make sense.
Dude, I don't know what my man Bruno here is saying. Like, you're not down 500K, man. You wrote covered calls, and your covered calls went underwater, and you can't roll them out, so you have to give up your shares. You're still going to profit off of the shares, and you're going to profit off of the premiums that you had for those covered calls. It sucks that you can't roll, but that's the game. That's the risk you take on. If you want to get back in, you can try to do so with cash secured puts, but you're not down anything. You're like down opportunity cost, and that's so fleeting. So, and then also, like, I think we just have mentioned time and again that we're not offering financial advice. I've gone underwater on so many covered. Dude, I went underwater on Tesla covered calls at 285 on the first time I wrote covered calls, like 2 weeks before Trump won the election. I lost those shares and I got back in with cash secured puts at 300 something, and it killed my cost basis. But who cares? Because I locked in gains and I knew the game that I was playing. And so the point is like, that's the risk you're taking on. There is no free money glitch that you can just make money without taking on any risk. So everybody just has to make their own decision with regards to the risk that they take on.
Yeah.
That's just my 2 cents. And like, I hope it helps. I know it feels like you're losing money right now, but I promise you it's just opportunity cost. Like, money in your pocket is better than just your portfolio looking good and you're able to screenshot it.
Yeah. Make sure you do your own due diligence. Like, even if the problem with the markets guys is if you were able to, like, he's throwing out TJ there, like TJ's made an insane amount of money, but if you just copy, like, or Amit, take Amit, he gets time after time right, or Manuel is like just ridiculous. If you copy Manuel and you do exactly what he does, but you don't take time to actually develop your own conviction, when names sell off or when they consolidate like Nebius, you're going to be tempted to get out and hold because you're like, well, this is stupid. Nebius was 140 or whatever, and now it's $80 a share, and it's probably going to zero. I'm out, and you're going to make zero money at all. It is so critical that you guys learn how to do your own due diligence, figure out what's important to you in terms of investing, and then do that accordingly. So, and hope you guys make a lot of money in the market, but there's times when you don't, and that's when you need to really figure out, like, am I holding junk or am I holding something that I know is going to be valuable? In 2022, that the downturn of the market was Palantir. Palantir made me a ton of money because I realized that some of the things I was holding, like ChargePoint was junk, and I'd lost about 45, almost 50% in that. And I'm like, well, this is painful. This wasn't a huge position for me, but it was not small either. And so I ended up looking at, I'm like, okay, it doesn't make sense anymore. Even though it's fallen, I'm not going to wait for it to go back and double. I'm going to sell all of it, take the loss, and I'm going to buy what I have the most conviction in, which is Palantir trading at like $6 or $7 a share. So I bought a ton of that. Now, on the other side, I also sold covered calls on Palantir, and a large part of my position, more than half of my position got away from covered calls. It was painful. So happens both ways.
Yeah, and what I will say about TJ is, like, the thing that he's taught me is the guy purely treats it as a business. And it's so much of a psychological shift you have to make in your brain, because I've had positions that I've gotten into through cash secured puts, and I've had an emotional type of connection where I was like, oh, I don't want to sell this just yet because I think it's going to go up. And I'm literally not, even though I have a portfolio for wheeling to avoid this, I don't always, like, it doesn't always default to my brain. Whereas TJ, like, he will get in at 41 and he'll get out at 42, and he'll collect money when he gets in and he'll collect money when he gets out. And he says, thank you very much. And it doesn't matter if it goes to 400. He's made that trade and he's fine. And he can just keep on making that trade on different. And so it's just like a complete mentality shift. Dude, I had freaking 7,000 shares of SoFi get called away at 16. What are you talking about? Like, like, it's just, it's just a part of the game. And I had those shares get called away at 16. I wrote more cash secured puts at 15.50, and all was well. And that's just the risk you take with having a wheeling portfolio. This is also why I have a long-term portfolio where I don't do options, because I'm not comfortable letting those shares get away. So I think it's a very expensive lesson, and I empathize with you. I don't love it for you, but I think it's a necessary lesson in the longevity of your overall trading if you do want to do selling of options going forward.
And one of the most dangerous things too for a new investor, I don't know, where he's at in his investing journey, but when you first start doing individual investing, is having immediate success that is just unsustainable. So let's say you invest in something you don't really understand, and it goes up 300%, and you sell and you're like, man, I'm a genius. And maybe you are, but the hard thing is usually then you begin to expect, like, this is normal, getting 300% gains in like 3 months, 6 months, a year, whatever. That's not. Or you think that it's sustainable, that you can do that and repeat that again and again. You can do very well. I think that a lot of people have the ability to, if they invest in what they know with money that they actually own and they hold long term in quality businesses, since we're lower to the ground, we actually see what's like real out there versus just seeing what's on the news media is saying. We can make a lot of money, and I think usually do better than the S&P 500, but that doesn't mean you're going to have 300% gains all the time. So immediate success can be very dangerous, just because then you expect and then demand yourself to do something that not even the best investors of history have been able to do. So can you throw up, there was a question by Joe before we move fully away from the EV stuff at 625. He said, what do we think about the U.S. suffering from a lack of competition in the EV market, especially with China having BYD and now Xiaomi at a fraction of the cost? So I'm not the biggest fan of tariffs at all. I mean, I've said before, I almost always oppose tariffs. This is one area where I'm actually kind of okay with it. So when I don't think it should be like a total ban or anything like that. But what's happening with, maybe not BYD anymore, I'd have to look into it, but Xiaomi, NIO, and many other EV manufacturers, is by and large part, China was directly subsidizing these companies. It wasn't just we do in the United States where it's, well, you'll save some tax money or something like that. I mean, that's part of doing business. It was basically like, hey, we will allow you to undercut everybody, both from how they've kind of manipulated. They're not as bad about it and egregious now as they were previously, their own currency, but also in terms of how they subsidize. So literally nobody compete, and it would kill every single EV business and manufacturer out there if there wasn't some sort of protection. So I'm not really in favor of tariffs, except this is one of those areas where I'm like, I'm okay with it Also, especially because I think that it's of national security interest for the United States to be able to manufacture things like vehicles. I mean, if you look at World War II and the history of where a lot of the product, Lord willing, there will be no massive World War that we need a lot of armament. But if we do, you need to be able to build stuff and build large stuff. And that is where vehicle manufacturers and others, aerospace manufacturers come in. So but yeah, they should be here. It should be tariff to whatever would actually be fair relative to removing the currency. So it's competitive, not killing the entire market. If that makes
I mean,
sense.
I think at the end of the day, the best product should win, regardless of like the tariffs are an artificial tool that can very easily cut the other way. If you tariff the best product, then you force inferior products that are non-tariffed in your country. You're not incentivizing those local businesses to improve their product offerings. And so if BYD comes out and they have a better product than Tesla, I absolutely want Tesla to sell off on that news. And I absolutely want BYD to take market share because over the long term, it forces innovation from a consumer perspective. And that's ultimately what you want. And so that's the other side of tariffs, which is not like, not, it doesn't help right now with tariffs because tariffs are the thumb on the scale of one company versus another, just where that based on where that company was founded. And I know that these companies are sort of like Chinese state sponsored and state backed and whatever, but that's also a thumb on the scale for the other side. And so ultimately it should come down to the consumer to make the best decision for them that is dictated by the best product in the market and based on their offerings, right? So if Tesla can find a way to have better margins, because you can just as easily say, oh, Trump has an announcement coming up in 2.5 hours. What if he says, we can't allow Ford to not be a player in the EV space? Ford is a great American company. Let's subsidize Ford. We're going to take a 20% stake and we're going to give them billions of dollars and we're going to do this and do that. It's like, dude, that's a horrible decision because it doesn't force that company to innovate. And I understand the loss from a soft power perspective because you're not allowing an American company to continue to compete in an evolving market, but you're going to lose out because the end consumers lose agency in their decision-making process.
Yeah. If you throw up Carl's 910s, 9010, I guess the other 9009 were taken. But the thing is, they're stealing designs from Porsche, ideas from Rivian, headlights from Lamborghini. Maybe. I mean, there's allegations that I know China's done it in the past. They're likely still doing it. There is innovation that's happening over there, but a lot of it is they're very good at reverse engineering. When I had a small business, and sadly, I was having to compete directly against Chinese knockoff products that were reverse engineered, and between not just the United States, the world basically subsidizing postage, especially United States, from China to the United States, and them at the time, like a lot of this was battery technology, and battery technology has gotten a lot better. And actually, CATL is one of those Chinese companies that does a lot of innovation. They're a leader there. So I'm not saying no innovation happens out of China. There's a lot that does, but there's also been a lot of theft and design theft like this, where they take something. In that case, they were basically stealing battery technology, doing the best they could. And at the time, China back in 2008 was not the same China as we know today. Where I think they're very, very capable, incredible. So they would sell these products that on the surface look like they meet all the same specs. And because I bought some, I was like, well, let me see how good this actually is. It was terrible. They were junk, terrible products. I'm not saying this about any Chinese manufacturer today, but yeah, that's the reality. And that is another factor that I think is worth pointing out, Carlos.
Yeah, I wasn't talking about the Intel stake. I was just giving you an example of how I think the government could potentially help out Ford, just to exaggerate the point, so to essentially get it across. Look, I think with regards to copying, that's just going to happen all across the board. I don't think there's good mechanisms or guardrails for that without the government getting involved. Because if let's say a Chinese company, or hell, let's say a European company, not to single out China, but whatever, some Eastern European company wants to ignore all the patents and go ahead and create the same replica products, what repercussions are there? in the market other than some regulatory body or some government official being the referee in that space. But the problem is, if you give the referees too much power, then you're in a whole different ball game, because all of a sudden it's like not a free market anymore. It's where do you draw the line with what the referees are agreeing to or disagreeing with?
Yeah, and for the record, going back to Intel, I don't think that that's a good thing. I don't think the government should be doing that here in the United States. But I wasn't 100% opposed, just because one of those national strategic interests where you have to have foundries. So, yeah.
Yeah, I think I agree with this. Like, okay, so let me sort of steelman both cases for you, erudition. Dumb not to copy, he says. Every company bought Teslas and deconstructed for ideas. Sure. I think on one hand, for the advancement of humanity, let's say, you'll go further if everybody copies everybody else's idea. If somebody in one continent discovered the wheel and the other continent had not discovered the wheel, by copying that technology back and forth, you can then accelerate the pace to the next advancement that builds on top of that technology. The problem is that these are like, we don't live in this like egalitarian utilitarian world. Like, we live in a capitalist, these companies compete with each other. And so it'd be like saying, oh, what about, this pharmaceutical company that now has a patent on a solution, like, so Novo, for example, and HIMSS, right? Novo spent billions of dollars in researching that patent, and now everybody else can copy it for free. That's not necessarily fair, because it doesn't incentivize these companies to actually put in the research and development costs to make something when they know that everybody is going to copy, because you're going to have companies out there that just wait and do nothing, and then they just copy whatever somebody else did. And so now, if Tesla has open patents, that's what I agree with. Like, if Tesla's saying, hey, please copy us, we need more of this in the world, then great. Please go ahead and copy them. And governments should not get involved in that. But it can cut both ways, is all I'm trying to say.
So since we talked a good bit about Tesla, let's talk about this too. This is pretty amazing.
Please, Matthew. I think you know the answer to this. All right.
So as Paulie Market mentioned, Elon Musk is worth more than Bezos, Zuckerberg, and Buffett combined. That's because of a stake in SpaceX. I saw a breakout, and I didn't bookmark it. I wish I did, where somebody had number one, Elon Musk / Tesla, number two, Elon Musk / SpaceX, number three, Larry Page. So, this is absolutely wild. Of course, he's probably going to be the world's first trillionaire, not the last. That's the way inflation works. But what are your thoughts on that, Tevis? Is this healthy? Is this like, oh man, it's not a great thing at all, or where do you slide on this?
So the most, bring that back up if you can, Roy, because the most mind-boggling thing about that chart is that if Elon Musk, let's say, was born on January 1st, 2025, just the year-to-date change, he would be the seventh richest person in the world. Like, he added $205 billion just this year to date, not even a full 12 months yet. So that is absolutely staggering, and should be in every textbook around the world as to how compounding works, because it gets these numbers that are very difficult for the human mind to wrap their mind around. 205 billion. If somebody breaks that out into like, what is that per second, you'd be shocked at what that is. Of course, he's not seeing any of this money, because all of it is tied up in stock options, and he would need to sell in order to actually get that money at the end of the day. But I remember, when was it, 2021, when he became the richest person in the world, and it was like a whole big event. And now he added pretty much that exact net worth in one single year. Like, when he became the richest person in the world, it was like, oh my gosh, Elon Musk, $200 billion, unfathomable, sum of money back in 2021. And yet he's adding $200 billion a year now. Right. So if you think about it from that perspective, it's just, 1 billion seconds is 32 years.
Yeah. So that is crazy. Yeah. There's a great comment where can I find it? There we go. Matthew Johnson, 425 at 641. He potentially could be the last trillionaire, especially when he says when robots are here, money won't really be a thing. I strongly agree with that. Elon Musk is way too
Really?
optimistic on. Oh yeah, yeah. Um, money
No,
won't
man,
really be a thing.
I don't agree
But,
with that.
money is going
But
to be a thing.
yeah,
We're not going to
like
enter some Star Trek utopia or something like that. Robots will come. Well, so the funny thing is, Tevis, this is before, of course. Like let's assume robots are here. I mean, Elon Musk is not just going to be a one trillionaire. We remember when we talked about the shareholder agreement with Elon Musk compensation. He'll do a lot of those if robots really become a thing and Tesla's involved in that. And I'm sure that they will be. So, but yeah, money's still going to be here a long, long, long time, probably all of our lives, maybe much longer as well. It may look pretty different, with cryptocurrency and who knows what happens, 40, 50 years from now. Impossible to predict, but
I 1,000% will bet you that money will be a thing 5 years from now, or 7 years from now, however long you want to say. Because at the end of the day, like, okay, just because we have robots, that's gonna take a long time. There's a gap between when the technology is introduced and when it's actually scaled enough to achieve the entire, like, to go through the entire human population. Dude, like, think about what is a technology that all humans have. Like you don't even have the internet in like half of Africa, right? And so it's just like money is absolutely going to be a thing, dude. I don't know what you're saying. Like robots are not going to be the all end, be end solution. Like it's, I think that's silly. I think that's like very, pie in the sky type of idea. Maybe in 100 years or 200 years, but even still, I think people will need some type of system to the reason why capitalism is so popular is because it plays so deeply in humans emotional sort of trajectory, like the need to accumulate resources, to have this purpose. I don't know if I'm rambling, but am I making sense?
well, yeah, but I think Matthew might just be pointing out that this would be like an Elon Musk argument. Maybe I don't think he's gone to the point where, but he's talked about a post scarcity society. I think it's just too optimistic. Now, a comment that just absolutely makes a lot of sense. Uncle Rio Suave 82. I'll take any odds. Yeah, Tev said, I don't know, you're missing from there. I guess that's just CEOs, maybe. I'll take any odds on Kalshi betting money will still be a thing. I mean, that's great. Like, money's no longer a thing. Then you lose, and it doesn't matter because money's no longer a thing. So, yes, any odds. Give me those.
Oh, here's your Coke. You can get it for free now. Come on, man. Come on. Robots can't do that.
No,
Sorry,
not for a long, long, long time, if ever. So,
yeah, it'll be here forever, but in a different form. I agree with this. He said 10, 20. He said 10 to 20 years, money won't be what it is today. He's talking about Optimus building everything. He's just talking about the U.S. Exactly. So
yeah.
There's a lot of like conditions on that statement.
All right, where do you want to go from here? We can talk PayPal, the bank stuff. We can talk Amazon. We can talk Nebius.
What do you have the list in front of you? Oh yeah, you have Amazon. So let me pull up Amazon. Okay. So I found this post, and this was quite funny. If you bought Amazon in 2021 when Jassy became CEO, and you account it for inflation, you're up less than single digits total in real terms over 4 years. I'm not going to read the last sentence because YouTube's going to be YouTube. So if you look at the cumulative rate of inflation, 19.9% over those 4 years, and you look at Amazon right now, it hasn't really moved. It has not really moved. And you compare this with other Magnificent Seven stocks, well, they've moved quite a bit more, which begs the question, is Amazon going to start moving in 2026, Roy? Because the thesis is that it's so cheap right now, man. Like, what are we doing here?
Is it cheap though?
How is it expensive?
I'm not saying it's expensive. I just think that my problem with Amazon is there's always better buys out there. Maybe that'll always be there. It's been on the radar. I don't think it's a bad buy here. I think that if you take the same gap in time that post looks at and you apply it to the future, I don't think we'll be saying, oh, it's basically an opportunity cost. That's still, you made a little tiny bit of money. No. But if we look at the Magnificent Seven, let me see if I've got, I've got the Magnificent Seven on Fiscal AI pulling up here in just a moment. And yeah, we can look at, let's just do forward PE. And we'll do maybe a little bit closer. I've shared it. If you can throw this up here. Maybe I'll zoom in a little bit from quarter four. Yeah, we'll go one more just to get rid of. There we go. Oh, there we go. All right. So this is looking at the Mag 7, 1, 2, 3, 4, 5, 6. Yeah, make it sure I have 7 there. No Broadcom, so we're not doing the Magnificent 8. This is a chart just showing the forward price to earnings. I mean, you don't even need to know what the color code is to know what the yellow is. That's Tesla. So we're going to remove Tesla here just because it is part of the Magnificent 7, but it helps us kind of better see the groupings of this. So you can see over time how these perform. Now, let me be reminded, Amazon is the yellow right up here. So it has traded previously at a substantial premium to price earnings. Now, this is a forward price earnings rather than current price earnings. And so you have to keep that in mind. But if you're talking about cheap and you're just comparing it to the Magnificent 7, Tevis, this is actually the second most expensive, excluding Tesla, out of the Magnificent 7. Now, maybe the PE is wrong and incorrect over the next 12 months. And I know you're talking about further out too, and we can go further out, a couple of years out, but the analysts get worse and worse at guessing that as time goes on. Versus, if we look at Meta right here, 2234. Of course, there's lawsuit, regulatory overhang, capital expenditures. Meta is cheap. Meta is growing much faster as well. We can look at revenue. We can look at revenue growth too. Amazon just doesn't have it. Nvidia is trading here at under 30. So 25 price to earnings forward, which is, they're growing ridiculously. Look at their rule of 40. It's impeccable. And you can really look at any of these names and say, other than maybe Apple, say that they're trading cheaply. Apple, relative to their growth, they're expensive. They just are. Congratulations, Apple shareholders. But
yeah, and so I think there's a couple of things that are not taken into account here. And yes, I'm not saying, by saying Amazon is cheap, I'm not also saying that Nvidia is expensive or Meta is expensive. I agree that both of those names are cheap relative to their growth, of course, on a forward PE basis. One thing that makes me bullish on Amazon and makes me want to own a position into 2026, Roy, is, and this is a piece that I don't think the market is accurately valuing, is that Amazon is the only big tech company that's designing its data center fully in-house, the Trainium chips, while everybody else, including Google, only designs the architecture of their TPUs and relies on Broadcom for the actual chip design. So I think Amazon is, first of all, the Trainium chips, I think they're going to be a big deal, and they're going to be a reason that the stock sees an uplift. So that's number one. Number two, you know what company is going to go public that Amazon owns 35% of?
Oh, man.
It's Anthropic.
Okay, yeah.
Amazon owns 35% of Anthropic, and Anthropic is going to go public at a $300 billion valuation, probably going to get bid up to $500 billion, is my guess. So that's number two. And then I think the robotics aspect, Amazon Robotics now has more than 1 million robots across their fulfillment centers, and that number is only going to keep rising even further. So Amazon is not the sexiest name in the Mag 7 by a long shot, but I definitely think it's one that's been ignored for far too long. And I think 2026 is going to be its time to shine.
Are you expecting this to increase, Tevis? If you can throw up the revenue itself. This is the 3-year revenue CAGR, so it's not, it's smoother than it would be otherwise. By the way, NVIDIA, I don't know what we're doing with NVIDIA right now, like trading at 25 forward PE with this. Like, what sense does it make? Now this is going to come down just because this is as they're accelerating to the growth curve. But this is where Amazon's at. This 12%, 12.33%. Is that good enough for where they're trading in their forward price earnings? Maybe they can increase that. And they can turn off some of the CapEx. They do have a lot of pricing power as it relates to Amazon Prime. They do benefit, like you mentioned, from Anthropic. So I'm not saying that like they're a dud company. I think that they're a fine company. I just have a hard time in allocating anything to Amazon when you're looking at their price to earnings, and it's really mediocre on a forward basis. You're looking at their revenue growth. It's pretty mediocre. You're looking at what they're launching and also what they haven't launched, and it does not blow me away at all. And so actually, let me remove that metric of 3-year, or I could just hide it. And then, so if we look at 2-year forward, Amazon's trading at a 28. So it's actually the second most expensive here. And I like the 2-year forward. 3 and 4 gets very, very speculative. So I'd take these with a grain of salt. But this is not compelling, Tevis. Now, beyond, you mentioned IPO, you mentioned a couple of things as well. Are you expecting revenue to like really start increasing, or is it more like an EPS play where they're going to be starting to be more efficient as far as that, or price free cash flow? Like, tell me what you're seeing, because I'm just not seeing it.
Yeah, I think the multiple is going to increase in anticipation of an increase in the actual earnings over the next several years. I think the market right now is not pricing in a lot of initiatives that Amazon is working on. And so it might get more expensive and again, we're having this conversation assuming that forward price to earnings is the most accurate way. But even if we say forward price to earnings, I think that multiple is going to increase after we see Anthropic's IPO, after we see some updates on Trainium, after we see more updates that Amazon is going to be releasing with robotics, with how they're leveraging AI. I mean, they mentioned that by 2030, my light is just flickering. They mentioned that by 2030, they aim for 50% of all deliveries to be autonomous, powered by AWS robotics cloud. So I want to see more updates from that perspective as well. I know these things because I'm just like recently building my thesis because I want to own a good chunk of Amazon. And so I think that these are some pieces that are more understated in the market. And not to mention, if you look at the free cash flow for Amazon, that's been compounding faster than the stock's been compounding. And we're expecting from management's guidance that free cash flow compounding is going to accelerate even further.
So let's look up the free cash flow too, because I know that's a significant part of investing. And with all these names, I don't think it's bad. Do you want to look at free cash flow margin, forward free cash flow yield, price to free cash flow? What measure?
Do you have operating free cash flow per share?
Let's see. No. This is what I have when I pull up free cash flow. So forward free cash flow yield, price free cash flow. Those are all forwards, ratios, FCF yield, margin. Do you want to do yield or forward yield?
Yeah, let's take a look. I don't have fiscal AI, so I have.
If we're talking about valuation, let's do price to free cash flow, and let me make sure that I have. Yeah, I've got separated by metric. And
let's take a look at the cash flow across all of them.
You want me to add Tesla again too? I'll add Tesla.
Well, I mean, sure.
And then I'll remove it. I'll actually just hide it. Tesla skews everything. It's honestly, it probably shouldn't be in the Magnificent Seven. I know. I'm a shareholder.
Yeah, I would want to see the free cash flow growth. So maybe some type of forward metric. So okay. Forward the free cash flow or something like that might work.
So we have forward free cash flow yield. I already have price
for operating cash flow is better for Amazon than price to free cash flow. Sagig says.
Okay. So here is the forward price to free cash flow here. Is that what he was asking for?
Yeah.
Okay. Yeah. So Amazon is significantly higher, 73.1. NVIDIA is much lower. And so, if you look at this, It's the most expensive other than Tesla, which I removed Tesla deliberately. So Nvidia, like, what are we doing?
And
I honestly, like, I think that's the name. There's some newer names that I'm probably going to add, but probably what I just need to do first is buy more freaking Nvidia. Like, it just does not make any sense at this. Then every time, like when I'm not even thinking about Nvidia and we're looking at Mag 7 and stuff, and we're talking valuation and growth and opportunity, like, do we really think that the Trainium units for Amazon and the TPUs for Google are really? No. I mean, like, they're going to be good for those businesses, but man, there's no Nvidia other than Nvidia. So
Mhm. Yeah, I think we need to do another Mag 7 ranking is I think what we need.
you know
um,
what one should be ranked number one?
uh,
It,
Apple.
no, it's the one that is growing like this. Let's show again. Right here.
That's wild, dude.
It's
But all
wild.
of
It's insane.
this is based on forward projections, though.
No, this is
Like,
not. This is 3-year revenue CAGR.
oh, this is okay. Got it. Got it. Got it. I
Yeah,
thought this was
you
forward.
with Fiscal AI, you can actually have it broken down by metric instead of so right here instead of single panel or by company. We could also do by company and have them all. I like the tool. By the way, since Tevis allowed me to do this before, I'm going to presume he's okay with it too. If you guys have not used Fiscal AI, if you are into doing your own due diligence, looking at companies, looking at valuations, it's a really good tool. I like it. I rarely subscribe to anything. I'm a cheapskate like that. I'll admit it. I'm not even subscribe to YouTube, even though I use it all the time, and I probably should, just because it saves me time. But this is a tool where I thought well enough for it that I was going to actually end up subscribing on my own, and then instead they became my first partnership. And so, yeah, that's the ad right there. But honestly, like if you haven't used it, if you want to check it out, there's a free trial link in my portfolio. If you do subscribe, I do get a little bit from that, and you also save yourself some money, 15% as well. So feel free to check it out. And thanks for letting me do that pitch, Tevis.
You're welcome. But Fisco really needs to approach me for a partnership or a sponsorship because I want to use their tools and I'm not going to do it for free. So let's get to it, Fiscal.
Yeah, it's really. I think what I'll do, Tevis, is I'll just send you my code, and then you get no, just kidding. Yeah, honestly, you would love the tool. It's really cool, but I hope that they do. And if they do ask me, like, "Hey, do I know somebody else?" You're going to be the first guy that I mention. So
Yeah, I might just clip this and tag them on X. Be like, guys, where's my partnership here? I'm giving you
yeah.
free advertising on my space.
So
Okay, what's next?
well, real quick, Harry Garcia had a point too. Like, risk is part of investing. So at 654, he said, "Isn't Nvidia a safer bet as it is too cheap for its growth?" I think it's trading way too cheaply. I would never say that Nvidia is a safer bet than Amazon. Amazon, there is no scenario other than just like the end of humanity, basically, in life as we know it, where Amazon doesn't exist in 10 years. Is there a scenario where Nvidia is really destroyed and beaten up in 10 years and trading at a much lower valuation? Yes. That'd be a conflict between China and Taiwan. Now, they are moving away from just purely being in Taiwan, but still, if I think the odds of this are very low, but if Taiwan is invaded, Nvidia's stock is going to be more than cut in half, probably, despite everything that they're doing, just because that's where they're at. So, yeah, the risk, there is some risk there. I just think it's extremely low risk. But Amazon, yeah, Amazon, if you buy it, hold it for 10 years, you're going to be patting yourself on the back. I just don't know how much. I think it's probably going to underperform some of these names over the next few years. Now, when Tevis, you started mentioning, future growth vectors, some of those, some of the big robotics pushes, maybe they'll be closer to the end of like getting Trainium to a real product that other people are buying, and it's seen as very accretive. And of course, moving away from USPS, those are things that are a few years out. So if Amazon sits right here, the market keeps moving up, and we're looking, 2.5, 3 years down the road, I think that's when Amazon is too much to ignore. But that's just me.
Yeah, 2 cents to add on to that. I agree entirely with Roy's assessment. And what I'll say is NVIDIA seems way cheaper because everybody is assuming that they're going to hit the forward projections, whether it's analysts that have the forward projections or Nvidia that has their own forward projections. I don't know if you guys were investing in 2021, and of course, I don't want to compare Nvidia with unprofitable companies, but in 2021, the market over-indexed on growth, and as a result, whenever growth disappeared because we were entering tougher economic times, then all of those companies just lost like 80% of their valuation. Um, and so I'm not saying the same is going to happen for Nvidia, but if it's like live by the sword, die by the sword, and the sword is growth, basically, and that's Nvidia for you. Amazon on the other side is way more diversified. I mean, sure they have a stake in Anthropic, but they also have the ads business, they have AWS, they have the robotics push, they have the Tranium, side with regards to the chips. They have the core their core logistics business, and now if they replace what was it, USPS, I think that they were going to replace, do Amazon, fully, like I there's so many different vectors that you can pull forward for Amazon there. It's not going to have sexy 70% plus growth rates or CAGRs like Nvidia is going to have. Absolutely not. But it's also not going to, like in the case, let's say that China does invade Taiwan or anything like this happens, a black swan event that isn't in Nvidia's control, Amazon will fall, but Nvidia will fall way, way more. And so it's safer so long as the growth still keeps coming in. But if not, then Amazon's probably safer.
Yeah, absolutely. Let's talk PayPal. We're at the hour mark, and then after this, we might do Q&A. There might be another topic or two. Let me note the. Okay, so
Also,
big news. Go ahead,
dude. I noticed you are making the timestamps. I've been using Gemini to make timestamps, and it's like it's really good. I think you should try it like after the show is over,
I'll do that.
after everything saves. Throw the YouTube link into Gemini and say make timestamps for me, and compare it with your own timestamps and see what it gets. Curious to hear your thoughts.
Gemini is really good. It's it shifted from an absolute joke to me using it fairly often to there are times I'm using ChatGPT less. I'm still using it the most, but I'm using it less, and Gemini increasingly more because it's scarily good. So the big news for PayPal, and I think you actually posted before I did. This is a busy Monday. Was that they filed in Utah for a banking license, which of course, if Mr. Beast himself is filing for this, and a lot of other companies that said that they would never do this are filing. We're going to see a lot of this. This is a product of deregulation, and a lot of that's happened since Donald Trump has come into office. For PayPal itself, it's not the equivalent of a banking license that SoFi has, which Anthony Noto is good at talking about, the benefits of being a nationally chartered bank. And for PayPal themselves, it's an ILC, which stands for Industrial Loan Company. I always forget that for some reason. So what this is basically allowing them to do, since they do a lot of lending in the form of PayPal working capital to many of their merchants, they can apply right there. And then PayPal eventually, it's really neat because instead of just getting their whatever take rate as PayPal, they'll add an amount to it as you're repaying back your loan. That's been a good product for them in the past. I think Alex Chris mentioned, I didn't pull up his post, but I think it's about $30 billion that PayPal has loaned out over the years. And if you're lending and you're not a bank, they're just a more efficient way to do that. Now, of course, they have buy now, pay later loans. A lot of that, especially in Europe with KKR, they partnered to offboard and de-risk some of those loans too. But yeah, this is going to help them be able to, of course, have those direct deposits instead of just partnering with others. It's going to benefit them and help them be more efficient in terms of all their lending that they do as well. And so, yeah, it's accretive. Now, the problem is it takes time to be approved, but I saw a lot of people saying this is like years and years and years away. Tevis, do you remember how long it took SoFi to get their national banking license?
Well, SoFi did it through an acquisition, and I believe it took 3 years, I want to say.
Yeah, I think that's right. It might have been just slightly less than that, but and it could have taken longer as well. Now, this I wouldn't count on this at all for next year, but there's less regulation, although not as banks have been impacted by this, and that's why you're seeing this. So we'll have to see what approvals actually look like and how fast it takes. But it's probably at least a year. ILCs have usually a little bit less red tape as well, and so I expect that PayPal will be able to be approved maybe like sometime in 2027, maybe early in 2027. And at that point, I think it's immediately accretive.
I mean, that's if they get approved.
I'm pretty sure that they will.
The first thing that I thought about when I saw this, because of course, I mean, you mentioned at the start, we also saw Mr. Beast was going through the same process. I also saw BitGo, the crypto company, pursuing a bank charter as well. I don't know if you heard about that one. That came out last week.
No.
Yeah, and like the first thing that I saw was what Anthony Noto said on one of the firesides probably last year, where he was like, "Hey, like, you know, we sort of grabbed the last bank." He said, "I don't expect another banking charter in a long, long time." And go ahead.
I think that was specific to national, though, not something specific like an ILC.
Okay, and so they would get the bank charter, but there would be limitations on it. What's the difference?
I'd have to go to ChatGPT again. I was researching that. I'm like, okay, it's an ILC. Tell me what that means. So I'm like, okay, great. Some of the things that normal banks would handle, like there wouldn't really be an accretive benefit from handling their own credit cards. They partner with Synchrony Bank and they use MasterCards, Rails for that. They can and will be FDIC insured. They don't have to do that through others. They can receive direct deposits without partnership, and they can issue loans, multiples similar to a nationally chartered bank. But everything else, basically, if my understanding is correct, is something that's the domain of the nationally chartered bank. And they probably can offer yield directly on their stablecoin. They are doing that right now with PayUSD with their stablecoin, but there's been some pushback against that, and people have said, "Oh, this is just a loophole because they partnered with Paxos, who then is able to issue that." Well, if they are an ILC, they can do that directly without any pushback at all. But yeah, I'm still looking into that because the difference is something that I'm sure those that are in the space, they know exactly the difference and everything. Me, I'm like, well, there's I don't know. I still need to learn more about that. I've not put out a video partly for that reason. So
yeah, what I'll say, like, who is their partner bank right now? They don't have one, right?
They use Synchrony Bank for a lot of their products. I don't know who they're using. I think they do FDIC insurance too. But yeah, Synchrony is usually who they use.
Got it. Yeah. Again, it's a matter of if in my mind, not when. I think we differ in opinions slightly on that, but we definitely agree that it's not going to be in 2026 for sure.
I would be pretty surprised if they weren't approved, but yeah, we'll have to see. Just, if this was under a Biden administration, I would be very skeptical, but yeah, Trump administration is very, very friendly, and I think it makes a lot of sense too. So
thank you, Narrative Ma'am. Yeah, this is like one of those old email chains in the 2000s. If you don't share to 10 friends, then you're going to have bad luck for 7 years or something. All right, let's do this. YouTube, PayPal. Oh, Alex Chris posted this today. Yeah, I saw this.
Yeah. This is news from a little while ago, and when this dropped, I'm like, man, that's really cool because I am a YouTuber and I do have some payout, and B, PayUSD. I'm like, okay, well, that makes a lot of sense. Now, this is using PayPal's Hyperwallet product. It's an acquisition under Dan Schulman, previous CEO, that's frankly been underutilized. A big part of the Hyperwallet is business payouts and also business to business. So PayPal is usually a go-to for any sort of like class action lawsuit where then they need to pay out to a variety of customers for stimulus, for refunds, for a lot of different things as well. And the benefit also for using PayUSD is immediate settlement. So I am planning to, once I get the payout for this December, it's supposed to land here sometime next week. For me anyway, I'm going to actually switch over to PayUSD and try it out. Why?
What's the utility benefit here, other than it's cool to use stable coins?
I'll get paid about 5 days earlier.
Okay. You get paid once a month from YouTube anyways. So like what does it matter what the day is?
I would imagine
I would imagine that the benefit is mainly around fees because, like, if I'm in Canada, for example, it has to convert into CAD. But walk
Yeah.
me through
So
it.
on the fee side, I don't know that there's much of a benefit there, just because you can directly deposit in your bank. There's no fees for that. It is a little bit faster with SoFi, just because they have the quicker deposits than traditional bank like Wells Fargo. And there's even a note. I have not signed up yet, and you have. So when you're doing this, if you have a hyper wallet ID already with PayPal, you have to create a new one. That's added friction. So I don't know. Like this is not something where I'm like, oh yeah, this changes the thesis for PayPal. No, it's just a neat another use case of Hyperwallet. But what's really cool is that it's using PayUSD. So what PayPal is wanting to do is use that product quite a bit for business to business transactions, which are slow and inefficient, and usually, there's a lot more cost than what they're able to do on the crypto payment rail. So since Google partnered with PayPal on this, I think that this is a proof of concept more than anything for PayPal as far as investment. They have used this before, for PayPal Ventures. They have used this some for business to business payments. And JP Morgan Chase is, actually beginning to do, not with PayUSD, but also stablecoin, this type of product as well. So but the main thing is you get paid, several days faster. When you sign up for the Hyperwallet thing, it does note that there may be some fees depending on what you're using PayUSD for. I think that's just referring to if it's in your PayPal wallet and you're paying, then merchants might be paying fees, or you might do a buy now pay later thing where you choose 16 months instead of the free pay in 4, and all of a sudden there's some fees attached to that. But I'm going to go through the process just to kind of investigate it. But the main thing that stands out to my mind is that immediate settlement, and then I can send it from that wallet anywhere around the world, and it also has immediate settlement as well.
Yeah, I mean, this is also just for US creators at the moment, so I couldn't do this even if I wanted to. So I would I'm just asking Grok right now what the potential benefit would be if I'm a Canadian creator.
Don't ask
Because
Rocket's stupid.
well,
Ask Gemini.
it's literally embedded into
Yeah.
X, so it was just easy. Let's take a look at this together. So this is in the context of me being an international creator. Again, this does not like a lot of these don't apply for USD, and it's currently only in the US. So, okay, when or if it comes to Canada, should I do it? It says yes, it could be worth opting in once available. So near instant access to your funds in your PayPal wallet is what Roy mentioned. This is going to be the same for US or Canada. Fees and conversion, so USD peg to avoid immediate CAD conversion fees, potentially lower costs for international spending or sending to collaborators. PayPal's exchange rate spread typically 3 to 4% plus any withdrawal fees. This is crazy, man. Like, easy to send peer-to-peer to UST members, hold crypto / DeFi yield. Early adoption could give you PayPal perks. Dude, there's no real benefit. Like there's nothing that I would be like, oh my gosh, I need to use this as a creator because XYZ. Like it's cool, but I don't really care.
The other one, which it might appeal to some, but for me, frankly, it wouldn't, is the yield for PayUSD is higher than what you can get from most things. So some people might be like, hey, I'm just going to stick it in my wallet and collect some yield. But I think that the instant settlement and that you get paid earlier, it's a big deal for some folks.
No, I mean, I can imagine that it's like useful if I'm just using my YouTube money to buy Bitcoin, for example, I can go into the stable coin and then from there buy Bitcoin, as opposed to withdrawing it into my bank account, then sending it to a broker and then buying Bitcoin from there. But other than that, I mean, I guess the speed is the only real benefit.
It's the main benefit, yeah.
Cool. Glad we cleared that out. What else? Do you have our list of topics that we were going to cover this show? What else do we have?
Yeah, there was a guy that sent it to me named Tevis that wants me to. So we didn't mention. Well, some of these were kind of earlier things. We could talk about JP Morgan tokenized money fund if we would like. More on Nebius, but I think we kind of touched that one. probably more macro stuff. So let's do the two macro pieces left. Let me pull these up right quick, and then I'll share, and then we'll get into Q&A here. So actually, I'll go live.
Did you cover everything you wanted to cover on the ClickHouse valuation? Because I think we wanted to respond to the benchmarking, and I don't think we did that piece.
We could go back into it. I'm completely fine talking more nebulous. Let's do the two macro things real quick first. So this is CME Fed Watch. I know you had a post that showed it, but we're at 75% chance of no rate cuts in January. It's moved around a little bit. A month ago it was closer to 48% with one rate cut, and of course this would be a hike retroactively. We had a cut in December, so I think that this is more than anything pricing that in. I don't think that surprises anyone. It's not shaking up the market at all. What's really going to move around a lot and what's something to keep an eye on is what we're looking at the year end. Now, Anthony Noto and SoFi's team during earnings, they tend to predict what they think unemployment will look like. They like to also talk about rate cuts as well. And so the market right now, we're at 350 to 375. It'll take me a while to get used to that. And so consensus is far from a consensus, overwhelming consensus, but it's looking at 2 rate cuts. I expect that SoFi might just say 1 because they tend to be a little bit more cautious and conservative on that. But I mean, we're all over the place. We could get 2 rate cuts. I don't think the market would be shocked. 3, the market wouldn't really be shocked. Just 1, that could even happen 2, and maybe 3. Wouldn't want to be over here because this means something really bad has happened, or maybe not. Of course, Donald Trump has effectively 2 seats to fill next year with the Federal Reserve. There's one board member whose term is up. And then Powell, his term as the Fed chair is up. He still has a seat at the board. Tradition has it, and he seems like a traditional guy, that when you're a Fed chair and then your term is up, then you also leave your position on the board. I'm sure the markets will make a big deal out of that and talk about how much, this is because of political. It's not. But with 2 seats, we'll see if the dot plot changes much. But what are your expectations next year, Tevis?
I think that we're going to get more rate cuts. I think right now the unemployment is the main focus, and we're going to see who the next Fed chair is going to be, but they're definitely going to be dovish, whether it's Waller, whether it's Hassett, or whoever in between. I think those are the front runners. I think Trump was meeting with Waller a couple days ago, potentially interviewing him. And I think that unemployment is going to continue to rise. Of course, we're going to see what non-farm payrolls are going to look like. It's weird, man. I feel myself, I keep coming back to that Peter Lynch quote where he's like, I look at the macro maybe 10 minutes every year and it doesn't really matter. And I feel like with algorithmic trading, I made a post and I was like, whoever created algos, I want to punch you in the fucking nose, because I feel like everybody in the market just looks at, the macro and it's like, I saw somebody post, he's like, oh, well, the Bank of Japan is going to raise rates. I'm like, dude, I don't care. Like, why is Nebius down because of that? Like, is Nebius operating in Japan? Like, everything is so intertwined, and it just makes me so irritated, because you can't judge a business anymore by what they're fundamentally doing, because there's so much artificial inflation as a result of these huge funds that are just sort of playing God, buying and selling and just algos trading on buzzwords. And it's kind of crazy. I hate it, to be honest with you. The fact that I even know what non-farm payrolls are, let alone that I have it marked in my calendar when the news drops. It's just stupid, man. I just want to focus on my own stocks and then just be on my merry way.
Yeah, not the world we live in, but thankfully we're not where we were a couple of years ago, where the whole market moved on his word. If he sneezed one too many times, man, it was red. So not a good environment to be in. The other piece, as far as macro, let me reshare this, is of course the price of oil. I do agree with you. You can spend too much time on this. This is, though, a very large economic driver. I think even more significant than rate cuts. And so the price.
We'll talk about this.
Yeah. So the price of oil has fallen to $55 a barrel. Natural gas prices also looks like there's a glut there, which isn't great as a VG investor. But at their lowest level since February 2021, it's one of those talking points that Trump mentioned, in the previous campaign, and variety of factors. President has some to do with this, but there's other factors at play too. This is falling down quite a bit. So, what do you think in terms of are we actually going to see what Trump is looking at, the $2 per gallon, other than places that tax incredibly heavily, or is that just not realistic?
I don't have an educated opinion on oil and gas, to be honest with you. It's Next is trading like they're producing a freaking million barrels a day, even though they're not producing anything, and they're just nosediving. But I don't really have an opinion. I know you own some VG, and VG's been trading down incredibly as well.
Falling nice.
So, yeah. I mean, we'll see what happens with oil and gas.
I think I'm still a very small position. I might just start a DCA of just like 100 shares per week until I get the amount that I want. But I'm not quite at that point in terms of all the due diligence. It's a space that I understand enough to know, like, hey, this is not abnormal for these type of plays, and energy, especially that type of play in energy, it's a boom bust cycle. And this, by the way, signals, if it keeps falling, a bust cycle. That a lot of the projects, a lot of development is not going to happen, which again then impacts supply, and as a result, then it booms again. So, I hope that the war between Ukraine and Russia ends. That'll not be a good thing for energy prices. Middle East stabilization, not a good thing. But I hope those things happen anyway. If it takes VG going to zero to have that happen, great. Send it to zero. I will lose my couple $1,000, I guess. So yeah, I'm not too worried about that. I'm not paying too much attention to that. But it's also one of those factors too, as far as why I'm reticent to get into in phase again. It's harder to figure out when that's going to turn around. But when you have really low energy prices and really high interest rates and really high regulation too, that's not a good recipe. So that can go low.
Yeah.
You want to talk more Nebius or Q&A?
Oh man, there's also one other topic really quick. This is gonna be a long stream. I'm sorry, Roy. I recently did the YouTube analytics, and like bootleg doesn't really perform very well, so I'm like against having super long streams, but man, are they fun to talk about. So really quick, just on Nebius, and then I kind of want to go to this other topic. I just want to touch on the Warner Bros stuff for just 2 minutes.
Oh, yes. Yeah.
And people are asking for BM&R talk. So maybe let's just do those 4 things. Okay. So 23 hours trading, Nebius, Warner Bros. Discovery, BM&R. And we'll do like 3 minutes each. Okay.
Yeah.
Okay. Cool. Nebius talk. Let's start off there. So I posted this. First of all, Nebius is cheap. Why is it cheap, Tevis? Well, the market cap currently is under the value of the Microsoft and the Meta deal combined. Just the value of those 2 deals is currently higher than the market capitalization of the company. Now, that's not all going to the bottom line, so that's not necessarily an accurate way. It's just an illustration to show that this thing is pretty cheap. Now, the subsidiaries is really how I've been tackling it. So I made this post saying that, hey, ClickHouse is about $6 billion valuation, yet they're beating all competitors in speed, cost, and efficiency per the benchmarks below that they dropped. Nebius, of course, owns, I think, 23% of ClickHouse, 28% of ClickHouse. So this is the benchmark report. So this is ClickHouse who released this report saying we benchmarked Snowflake, which is what, $70, $80 billion, Databricks, which wants to IPO at $134 billion, BigQuery, which is Google, and Amazon Redshift, across 1 billion rows, 10 billion rows, and 100 billion rows worth of data, applying each vendor's real compute billing rules. And here you can see the runtime, slower versus faster on the horizontal axis. And on the vertical axis, you can see the total cost. So lower cost is obviously better. So it goes lower to higher, because the more expensive it is, then the worse it is. As you can see here, Snowflakes and Databricks are pretty expensive, but they're also pretty fast. And then you have the small models, which are very cheap, but they're also very slow. And then here, the top right quadrant is where you want to be in, fast and low cost. And look at this right here. ClickHouse is the fastest model out there and almost as cheap as Databricks Enterprise version. It's the second cheapest, in addition to being the fastest. So if you're looking at an aggregate efficiency metric, ClickHouse would be the most efficient one here. And that's on, so this is on 1 billion rows. This is on 10 billion rows. So ClickHouse is by far separating themselves from the market, and this is 100 billion rows.
Wow.
It is absolutely staggering based on this benchmark report how efficient they are relative to these four competitors. So all that to say is that, again, further illustration to highlight that this thing is cheap because ClickHouse is only $6 billion. And if they raised money today, they'd probably be double that valuation. And I think that, if and when Databricks goes public, they can easily raise more money. Next unicorn, well, I mean, technically they already are a unicorn since they're $6 billion. But yeah, they're very, very cheap.
Yeah, I mean, it's something that Nebius owns rather than is directly Nebius, but it's a lot like the benchmarks that Nebius has themselves, for the cloud that they're able to use. But that's impressive. So
yeah. I just wanted to bring this up. I mean, didn't really think Redshift or BigQuery are considered in the top tier of analytics platforms. So be it. I mean, maybe they're selective. Some selective bias around the benchmarking. And it's just one data point. I'm not saying like, hey, stake your entire life on ClickHouse. What I am saying is that Nebius owns almost $2 billion of this company at its current valuation. That $2 billion can become $4 billion very soon if and when they decide to raise more money, and their valuation skyrockets over $10 billion total. So Nebius is only $20 billion as a whole right now, right? So if they're owning $2 billion of ClickHouse, it's like saying 10% of their value is essentially ClickHouse. Now, I don't think they get that way because the market is completely discounting the subsidiary value in ClickHouse and Avride and others. Go ahead, Ray.
So why are you in Nebius instead of like CoreWeave?
Well, I think the subsidiary value is one of the pieces. I think the full end-to-end platform is another piece. I don't know if you saw the post-production they released from Token Factory. They just released this a couple of days ago. But basically, they're like one of the they're across the entire stack. They're trying to be as vertically integrated as they can. And I think the diversification in the subsidiaries really gives you a lot of optionality there in terms of them playing in multiple spaces. One other thing on the Avride piece, so just to give you an example, is Avride uses Nebius for all their sort of data center needs. They're going to be one of the key players in autonomous, like one of the, obviously they're the smallest player when compared to Waymo and Tesla, but they're one of the players. Nebius also benefits from a training perspective from that data set because they have Avride, who is collecting data in real time. So not only is there exposure from a market capitalization perspective by owning Avride, but there's also exposure from the actual product offering, enhancing the training of Nebius's core offering that they can then use for other, competitors in that space.
Yeah, and for me, I'm not in Nebius now either. I was never in CoreWeave, but I was in Nebius for a little while, and I liked Nebius at the time for two reasons. One was their valuation was trading at an extreme discount to CoreWeave. I don't think that's any longer the case, although I've not looked at CoreWeave in a while. Could be wrong. The other factor too is you look at the actual quality. Like it's. I'm not saying that their competition is bad, but most benchmarks tend to favor Nebius and in their position in Europe as well, which given the skepticism that some have had in Europe on U.S. tech companies, I'm like, man, that can only be beneficial. So, and they're not ignoring the U.S. either. They're building massive facilities. Of course, a solely owned one talked about last week in New Jersey too. So, something I have an eye on. We'll see if I start a position or not, but pretty sure I'll start a position in that before Amazon. So,
I also think the debt profile is significantly better because CoreWeave, the debt profile there is not looking great.
yeah. No, that's definitely a factor too. Okay, 3 minutes have gone by and then some. So, what was next, Tevis? 23-hour markets?
Yes. I don't know what Joe H is saying about the Speed Act. I have no idea on what that is, Joe. So if you'd like to clarify for us, I'd be happy to throw up the comment. Let me just bookmark some questions here. Okay, so
So BMR, yeah, that's right. BMR and
Warner Bros.
Oh yeah,
and 23-hour trading. Okay, so let's
23 will just be in Q&A period.
23 hours. Let's do it in Q&A period. How's my portfolio doing? Not good, bro. It's down. HIMS is down. I don't own Webull. BMR is down. Nebius is down. SoFi's down. My portfolio is down. I'm still up like I think almost 40% on the year. It's not 90% like I was in the beginning of October though, so I'm very sad about that. But yeah, I mean, full disclosure, right? Like it's down, and I'm not necessarily happy about it. This is also why I'm buying some mega cap names. Okay, let's go into some breaking news. I mean, breaking as of 3 hours ago. Warner Bros. Warner Bros. Board. Okay, let me share my screen here. Let's take a look here. Yeah. So Warner Brothers to tell shareholders to reject Paramount offer and recommend Netflix deal. This is the Wall Street Journal reporting this, where the board of directors, Anthony Noto is on the board, by the way, is telling shareholders reject the higher offer for Netflix. Now, given that they have a fiduciary responsibility, I don't know what their argument there is. Probably it's that the value of all the stuff that Netflix isn't buying is going to be higher than the value that Paramount is offering them. I still think that Paramount is going to increase their bid, but Polymarket is now pricing in Netflix to be the front runner in this deal. So as you can see, just earlier today, those odds flipped drastically. Wow. Prior to this, Paramount was about 50-ish%, and now Netflix is about 68% and Paramount 14%. So this is what the betting markets think. This is, of course, will it close by June 30th, 2027? Roy, what do you think?
Yeah, probably Netflix. But I think the reason for the flip really is that the board is recommending the lower offer simply because they already have Netflix subscriptions, and they're like, hey, this is great. We get this. We don't have to subscribe to something. No, I'm just kidding. I'm actually rooting for Netflix just for that reason. Yeah, Netflix might even increase their bid to sweeten the pot a little bit too if shareholders push back on this much. I'm not a shareholder, so but the odds previously, which were inverted from where they are today, I was a little bit surprised, even though Paramount had the higher offer. That's not the only factor. I think it's a little too extreme here too, but so we'll probably see maybe something closer to what we saw previously. Just because shareholders recommend it doesn't mean it's going to happen.
Wow, I didn't know this.
Yeah,
that's a big deal if that's true. Netflix is now more likely to win because Jared Kushner dropped out of the Paramount bid. Gamer with ESP says, which is a great gamer tag.
Might not be able to afford it.
Maybe let me just cover the Speed Act really quick from Joe here. And I hate to pivot like crazy, Roy, but I think it links up with the Nebius conversation. So I don't want to, move away and then come back to it. So, okay. The Speed Act is a House bill that aims to make federal environmental review under NEPA faster and less ambiguous. So projects tied to AI infrastructure could actually get built on a timeline that matches demand. The bill is framed as amending NEPA. I don't know what NEPA is, to clarify ambiguous provisions and facilitate a more efficient, effective, and timely environmental process. So basically, they help build out of AI data centers. Here you can see a little Google Gemini diagram. It says unclogging the bottleneck for AI's power grid. Permitting is the chokehold. Data centers basically have this multi-year review process, which creates uncertainty. And through the SPEED Act, they can have a more timely environmental review, which will then improve the timelines and lower the risk for data center build out. And that will lead to more data centers. Grid and power infrastructure builders are going to get help from this, and also power generators and specialized buyers like Cipher and Iron as well are going to get a help from this. Really interesting in the context of the fact that Nebius, I think, has 3 US data centers that are not announced yet officially by the company, but the company is looking at and or has probably made an offer into.
Yep.
Any thoughts? Or I don't know where this is in terms of the approval process, but according to Joe, it's already it's going into the House right now. So if this does pass, then that should be good for all AI plays, including Iron, Nebius, and Cipher.
Yeah,
and more.
absolutely. A lot of beneficiaries.
Yeah. We also know Trump is giving an announcement in about an hour and a half, and we don't know what that announcement is going to be about. So we'll take a look. So thank you, Joe, for sharing that with us. Let's now move on to the next topic.
BM&R.
BM&R.
Two pieces of news, and I've been so behind. It's one of those videos I wanted to make, and now there's 2 related to SEC filings. So the most recent one here is that their CFO resigned. Word is that this is amicable. This isn't any other reason beyond that. Here's the 8K itself. You can see the lump sum severance, and I wish that if I left a position, I'd get over $1 million. But it is what it is. We just, usually when a CFO leaves, it's a really bad thing for the stock. And then there's always people that are like, somebody knows something and they're leaving because of sketchy reasons. Now, sometimes that actually does happen. Rarely does it happen. BM&R, I wouldn't, I don't have any concerns personally, but Tevis, do you have any thoughts on this?
I do find it a little bit weird from a timing perspective, because the second piece of news, which I suspect you're going to highlight, is the shares going to 50 billion. So the fact that these things happen, was that it? Was that the announcement?
Yeah.
So the fact that these things happen like back to back, like, okay, shares go to 50 billion and then CFO resigns, I can't help but drawing the connection in my brain.
Yeah, shares are going to 50 billion. It's actually not quite correct. It's authorizing shares to be up to $50 billion. This isn't for, as some have speculated, it's because the price is going to go up so much that they'll have to reverse split 1 billion times, and then they'll have like the most shares out of. I don't know if there's any companies out there that have more. I haven't had the time to look into that, but 50 billion is an eye-catching amount. It's an amazing amount of shares.
I think the reason, let's be honest, it's a ridiculous amount.
Yeah. What this is really for, the NASDAQ, this was maybe like 5 or 6 months ago, had some pushback because so many of the companies at the time, crypto was doing incredibly well, and a lot of companies had added or were looking to add, without explicit shareholder approval, a lot of crypto to their balance sheet. And so they were changing some rules and regulations to make it so that you had to have authorization from shareholders to be able to dilute in order to buy and hold this on the balance sheet. And so they're not affected. BM&R is not. They're the Amex exchange for New York Stock Exchange. But at some point, I imagine they'll want to go to the Nasdaq. So I think that this is preemptive of that, and also it gives them, because 50 billion is an absolutely ridiculous amount. That no matter what the scenario is, they have the shares that they can use in whatever scenario it is to be able to sell BMNR at a premium. So far, that's all what they've done to be able to buy underlying. The one thing that is weird though is the 50 billion amount. Like 5 billion would be like, oh, okay, that's a lot still, but makes sense. 50, it is a little bit odd. So yeah, I understand your reticence, but are you? Does this change anything for you with BMNR?
No, no, it doesn't change a lot because like I think 50 billion is a stupid amount of shares, quite frankly. Like you're talking about a company that's what's BMNR's market cap right now? It's not 50 billion. It's like less than half of that. And it's like what, 12 billion?
Let me look it up.
So like $1 of market cap, you have up to like 3 shares, 4 shares.
Not even 14.
Exactly. So it's just kind of ridiculous. Like one share of, let's just, and I understand it's authorized, it's not actually happening, this is like them having ample room, but like let's just say they did 50 billion, you own one share and that's worth what, like you know half of a quarter of $1 of BMNR or whatever it ends up being. It's just kind of stupid.
Yeah.
It's way too much. Like, but at the same time, the reason I'm not concerned is because BMNR fundamentally is worth what it holds, and what it holds is not really going to get like that's the size of the pie, man. Like the pie is the pie. You can cut it a gazillion freaking times. You can cut it like that's the pie. You're not gonna, lose. I don't know what I'm trying to say. If it was like another company, like I understand the dilution aspect because you're baselining the valuation based on the growth that that company has. But from a BM&R perspective, it's a holding company essentially of an asset that is not really changing from market cap.
Yeah, to be clear, CFO, not CEO, left. CEO did leave previously, but that was already understood that he was going to be leaving at some point. This is a bit more of it is a surprise, frankly, not just a bit more. Q&A time?
Yeah. I feel like I did a bad job answering the BM&R question, but I mean, I'm going to have a weekly recap anyways for BM&R, and I think maybe I'll do a separate video on this. Yeah, Q&A time. Let me throw up some questions. If you guys have questions, let us know, and we'll try to get to all of them in our allotted time. And if we don't get to all of them, we apologize ahead of time. Okay, we covered this.
I don't. I just kidding.
Yeah, did you hear about the Warner Bros. Going to reject Paramount in favor of Netflix? Question. Yeah, we heard about it. We covered it. What are we buying?
This week, I don't think it's early. I've not bought anything this week other than the Bitcoin DCA that I have. Last week, I think it was just that, actually. I don't think I think maybe I bought some VG and I wrote cash secured puts on a company that I've been talking quite a bit about, Mark Cagney's startup, so Figure. But they did not fill. So actually, I think that they might. No, they're not going to fill no matter what, basically. The market moved the other direction on those. So I'll probably keep selling those until they eventually do fill, but that's it. What about you?
What am I buying? Meta is one thing that I'm buying. It's so crazy. I'm so over allocated to BMNR and Nebius, and I can't help but buy a little bit more. So I bought a little bit more. I did some cash secured puts on BMNR, and I also bought some long calls. And I want to be buying Amazon, but similar to you, Roy, like I just feel as though if we do have a rebound going into the end of the year, then BMNR and Nebius from this point on will rebound harder than Amazon would. And so I just want to be taking advantage of that. And so Meta has been the only thing that I've been buying so far.
Yeah, I need to start DCAing into like weekly into NVIDIA, I think now.
weekly. Yeah, I want to do Nvidia as well, but same argument, right? Like I'm like, okay, I have $1,000, let's say. Do I want to put that in Nvidia or do I want to put it in Nebius at $80? Like, okay, it's just like it's silly, man. Like if Nvidia goes to 250, I can still make more money with Nebius at $80,
Yeah,
right?
I think there's more like it's risk reward. Like there's definitely more upside potential with Nebius. I thought that all along, even when I sold out of my position and bought Nvidia with it. But there's also more risk too.
Mm-hmm. Yeah, and I mean, at this, it's like, what's that? What's that expression? In for a penny, in for a pound, or something like that. So I'm in for like a gazillion free pounds because I'm head first, man, and I'm
And
either going to drown or I'm going to finish the race first.
and this is exactly why when we're looking at the net worth of those CEOs, that you're not on there. It's because you're in for a penny and for a pound, and the market has been tough over the last couple months.
Yeah, and it's also why if your name is Bruce, you should not follow us into any of these trades, please, like at all. And this is
Especially
just
Bruce.
especially Bruce. Love you, Bruce. Please don't follow us. If you've not, okay. So here's my thing, man. If you've been following me long enough to know that you've seen me long enough, and you still want to follow my trades, it's on you, brother. Like you know I'm a degenerate. So if you're following my trades, this is probably like your first show that you've seen, and I was semi-coherent. But if this is like your 10th show and you're like, oh, that Tevis guy sounds smart, you're the idiot. All right. Okay. Care to discuss Planet Labs? I don't know anything about them.
Yeah, I don't know anything about it. Sorry.
Do you like CoreWeave as a business?
I think it's okay. Well, the other thing I neglected when we were talking about like the comparison is they rent Nebius owns, and I like that for Nebius.
Yeah. Again, I would rather have Nebius. Do you track Nebius construction progress compared to others? You guys have a solar play, not doing BG yet. Okay, so for construction progress, I've been starting to track it more and more. Not necessarily just like the progress, because there's so early stages on Missouri, Alabama, and Indiana that like I've been reporting on a weekly basis on like the city permits and the approval statuses, and I'm expecting those official press releases to drop in the first quarter of 2026. And once they do drop, oh buddy, you're gonna see some big jumps in the stock, because we know that they build when they have the demand, they build when they have a client on the other side of that deal. And so now it's like, well, not only do they want to build in the US, but they want to wholly own it and build it themselves, not through Data One, just themselves. So to that extent, I think that's incredibly bullish, and I think the market is just not seeing it right now. And but it's also too early days for us to be tracking the build out process. I know Data One did it in like 6 months. I think if Nebius does it themselves, it's going to take longer than 6 months. So we can expect it to be, approved, let's just say, in Q1 of 2026. And if so, if they can start building in Q1 of 2026, then operational by 2027 for them to start fulfilling that demand, to give them a little bit of a buffer room. I think at that point, once it's actually approved and the build out has started, will I be tracking the build out speed relative to their, previous build outs?
So for solar play, I'll answer that part. I don't have one. I was in phase for just a little while, lost a very small amount of money, and thankfully got out before the huge drop. I just decided to go in VG instead. Its energy is hard. I think solar is hyper cyclical, and maybe as we approach or after bid terms, that you'll see the market actually begin to appreciate solar plays a little bit more. I also think that there's Solar Edge is a good possibility. It's not an American company, but They have more of a commercial leaning. Enphase traditionally was just home base only. They've gotten into commercial. We'll see how that really does in the next boom cycle. I think it'll do pretty well. There's many others out there too. So I would just rather either be on the sidelines or be in other energy plays. So.
Yep. Speaking of VG, did you add any more? Just curious if you've looked into it deeper. Kyle asks.
Yeah, I'm at 300 shares, so it's still very small, but I'm not at the point where I'm like, okay, I'm going to DCA and just start doing 100 shares a week until it gets to the size that I want. But I like it. Probably going to make it a long-term position. There's still a lot more I need to do because this, versus like Figure, that's one where I understand the space decently well, although they're doing things very differently because it's all built around crypto. So it took a little while there. I'm closer to making that a full-time, like an actual position rather than VG. But I like them both. And they're probably going to be both in my portfolio next year.
Do you want to continue the tradition of buying 100 shares on the pod live, or?
Well, it is trading under 6, but I think the first time I did that was 8 and then under 7. So if I buy under 6, maybe the next time will be under 5, 4, 3, 2, and then below 0. Wait, no, that can't happen. So
I mean, you said it's going to 0 when the war ends, or if the war ends. So I mean, it kind of makes sense.
Yeah, the arbitration thing is one of those where I really have a tenuous grasp on. I was talking with somebody, and I don't know if I can make them known, but that's in the field, and they gave me a lot of information on that, and it was helpful to understand. But it just, sizing is important, and so for my portfolio where it's at right now, 300 shares, like if it goes to 0, it's not going to 0, but it's not a huge loss versus somebody else that might be 70% of the portfolio. Like, don't do that on names you don't have the conviction on yet.
Yeah. We just covered this on the 500 million to 50 billion. Just rewind 10 minutes. Okay, let's see. Does no one hedge with the VIX anymore? Easy stuff.
I did in 2024. There's other hedges out there that I've done before. I don't hedge often. I just do when there's a lot of signals that are screaming that we're near a top, or local top rather. I don't think we're at a local top. We're obviously not. So. I did make a good bit of money from the VIX, though, in 2023. It was fun.
Ironic that Matthew asked this, and I use this as an example. If you didn't own Nebius or NVIDIA, which stock would you buy and start a long-term position in for 2026? If I'm looking at just 2026, I would probably go Nebius.
Well, but so he said long position, so long-term position. So I'm guessing, let's say 5+ years. That's easy NVIDIA for me.
It really depends, man. Like, if are you going to full port into this position for 5 years? Is it just like, do you already if you already own, let's say, everything around, like all the competitors, and it's just, there's too much unknown.
I think with NVIDIA, there's a lot less unknown, though, especially where they're trading at. If NVIDIA is trading at $300 a share, I'd be like, probably Nebius. But it's not. It's trading. We just looked at the valuation earlier. It's the cheapest Mag 7 by almost every single measure you look at. The market is saying, oh, it's going to slow down. It's been saying that for 2 years, Tevis. The market's wrong. It just is. Now, it will slow down, relative to as it has higher and higher comps. So I'd be growing in triple digits. I don't think we'll ever see that again, especially because they're the largest publicly traded company in the world. But, risk and reward are both factors. Reward is higher for Nebius if you're looking 5 years out. Risk is also higher. NVIDIA, like if I'm talking about like a real position, and NVIDIA is in my portfolio, Nebius is not. NVIDIA, barring unless you really think China is going to invade Taiwan, NVIDIA is going to do very, very well. And even though it's volatile, especially relative to some other Mag 7 peers, it's a pretty stable stock when you compare it to Nebius. Nebius is extreme beta. Personally, for me, I have plenty of beta in my portfolio. I want something that's more stable. It's funny that that NVIDIA is more stable. Now, I do have some friends that they've played it very conservatively, and they want high beta stocks just so that they can add some volatility to their portfolio. Well, Nebius makes sense in that equation. So for me personally, though, NVIDIA, and it's like not even close.
Yeah, I think you nailed it by saying NVIDIA is relatively safer name between those two, but Nebius has a higher upside potential, obviously, because it's a $20 billion company. And if you look out 2 years, 3 years, and Nebius does what they're tracking to do right now, if we just even ignore the fact that they've raised guidance like every time they've had the opportunity to talk about guidance, even if we just ignore that, uh, and if we're in a risk off type of environment, like a bull market, essentially, like you can see Nebius go way higher than what it is right now, multiple hundreds of dollars. And I wouldn't be surprised where in 5 years this thing does a 10x if they continue to execute. But again, that's the big risk, right? Is the execution risk, is what the macro is. Nebius business model still has to be proven out in the eyes of the market. NVIDIA is sort of a mainstay staple of the AI wave. So that's the main distinction in my mind.
Yeah.
All right. Jeez, I'm attracting a interesting audience here. What's a stock you guys are up on buying now this year? Nebius, Amazon, BMNR, Misty. Is that MicroStrategy? I want to know new positions from this year, not from 2022.
That might be YieldMax version of MicroStrategy, maybe, but yeah, I don't do that sort of thing. I don't do. Can you guess what he means by you guys are up on buying now this year? Is he referring to something that's in a portfolio that's performed well and yet we want to add more? Because that would be NVIDIA.
You guys are up on buying now this year. I took it as like what's something that like a position we started this year. Is how
NVIDIA. All my answers just go back to NVIDIA. I'll just answer NVIDIA to everything. But it's sincere. I didn't have a position. The April tariff stuff gave me a position. Started buying in triple digits and in double digits, and my average is looking quite good relative to where it's at.
Yeah, I would say for me, I mean, I didn't own Nebius, nor did I own BMNR ahead of 2025. So 2025, they're new positions for me. And I mean, three questions ago, I said that I was still buying both of them. So that's just an easy answer. And I think I've talked about why for each. Interesting question here. Do you think Tesla shareholders will sell off to purchase SpaceX when it goes public?
I don't think so. I think most Tesla shareholders that wanted to sell, whether because of price accumulation or because the thesis broke, had that opportunity. A lot of just engage in X and say something bad about Tesla, and you're going to get a lot of people just calling you out. And they go way over the top, by the way, as much as I like Tesla, especially the product. So I would be surprised if there's a meaningful movement of selling and selling off. Now, if that happens, great, because I would like to add more Tesla at much lower valuations, though. So,
yep. I think that, yes, the retail shareholder base is going to sell off to some degree. I don't really think it's going to make a big dent in the stock at all because a lot of it is like institutionally driven at this point in time. So I mean, like one question I wanted to ask you, Roy, on the SpaceX IPO is why do you think they're doing an IPO now? Elon has said he wants to keep SpaceX private for as long as possible because once you introduce it into the public markets, you have to sort of fight for like decision-making control. And he owns what, like 40% of SpaceX or something like that. If it's a private, it's like 43%. Like as a private company, he can do whatever he wants with that company. He has total control. But if he goes public, then it can deviate away from the mission, number one. Number two, they won't see revenue in the same way that a for-profit type of company would because it's mission-driven company. And so if he has to sacrifice revenue in the short term to go to Mars in the long term, like he's going to do that. And that's not necessarily going to be great for SpaceX. So I guess my question is like, why is now the time to do it?
I think two reasons. One is Rocket Lab. If you look at the price accumulation of that stock, by the way, that one might be hit when SpaceX goes public, just because you have limited exposure to actual space names. There's a few others out there too, but they've seen the success in that. The other is, like we mentioned and talked about earlier, that it's a bit of a bear market in terms of private equity. Now, SpaceX has done quite well, but even there, and also with OpenAI and Anthropic as well, there are signals that even for that they need more funding, and a great way to get that is in the public markets. There's a ton of people, myself included, Tevis, would love to own a piece of SpaceX. And I guess the third factor is just what's happening in the industry. Like Rocket Lab is not just going up extremely in valuation because it's a meme stock or something like that. No, it's because people understand this is growing rapidly. Whether Golden Dome becomes a thing here in the United States or not, there is a lot of opportunity near term in space. But since this is a very physical product that's very expensive, development is also very costly as well. You need funding, and so this gives them the opportunity, I think, to maintain their lead in the market.
Yeah, I'm seeing a lot of people say data centers in space. SpaceX is going public to raise cash for data centers in space.
That's so weird to me. I need to I was looking. It's been a long time since I've had physics and quantum mechanics, but I was like, okay, vacuums are actually not very efficient at cooling things. They actually insulate quite well, which is counterintuitive. But black body radiation is a thing, and so I'm like, okay, like how real and legit is this? What are actual scientists and engineers saying? But yeah.
I see also June saying he wants liquidity for XAI so he can beat Sam Altman. Like, I mean, I think they're all good theories. They all center around liquidity, but I would argue that he can just as easily get the liquidity with another funding round. Like, he doesn't need to fully go public. I don't know. That was my main question around why now. So I see
Everybody's saying data centers in space. So yeah. It's been way too long for me.
Crazy.
So,
I mean, I'm sure SpaceX can also raise a whole bunch of money with data centers in space too. Revenue to be 28 billion next year. That's crazy, bro.
It is.
Okay, let's see. Next question. A deep question. When AI takes over most of jobs, where will all profits go? Just to the owners, or government will force money distribution to the population?
Probably UBI, maybe like direct taxation per robot unit or something like that. I don't like that solution. It's hard for me to see another one.
I don't think AI is going to take over most jobs, so that's a false premise right there. But even if it did, then let's just do the math, right? So companies are going to start using AI more and more. That means that companies are going to be laying off people more and more. It's either going to be a fork in the road where governments are going to force some action in the form of UBI, or companies are going to be having to lower prices because nobody is employed and there's less liquidity in the markets. You're in a sort of recession or bear market because while you have efficiency in the company doing something cheaper, you also don't have the buying force to purchase all those products at the same prices. So I don't think there will be as much profits as people are thinking. Now, in a lot of businesses, this is completely invalidated. I'm talking about businesses that are selling B2C, right? If I'm doing something for 1/10 the cost, I can try to sell it at full price so long as there's a buyer at that price. I'm just trying to think from like how I would reason from it.
Yeah, I misread the question. I was lumping robotics in there, but I think robotics is one of those. I agree. I wouldn't take most jobs, but I think it's going to be, there will be some new jobs related to those industries, but I don't think it's a 1-for-1 or anywhere close. Automation tax, Duck says, maybe.
It's a good question. I think a lot of people around the world are asking themselves similar questions. It's like a very tough thing to get right because you have to have the shift be sustainable at all parts of the process, right? Like we can't blink and tomorrow be in a world where it's like 80% AI dominated because things are going to break. And so it's like, how do you keep it sustainable? By it, I mean the employment rate. How do you keep it sustainable relative to the expected profits that companies are guiding for at every stage as AI is taking more and more of that total share of production? That's a hard part.
Yeah, it's a really good question. Wish I had a
Yeah.
better
Yeah.
answer. This one, do you think Amazon would lease out its robotic tech to other companies or just leave it in house? I think that what we're seeing with Trainium CPUs, GPUs rather, that this is something which they built for an in-house thing, and then they're looking to also sell it to others as well. I think that maybe they'll follow somewhat similar path there. I don't know that it's going to be a massive, massive venture to them just because what Amazon does in robotics is very specific to Amazon. And there are some other warehouses and other companies that can benefit, but largely it's just them. So um,
Yeah.
maybe that's why I'm not super bullish Amazon.
Roy, how long are you really going to give PayPal to turn around? I think you said until Q1 26, if I'm not mistaken.
So yeah, this quarter is a big quarter for me. I have sold all of my options that were in my non-tax advantage account. So tax loss harvesting. I'm still. I put a reminder in there when I'm clear as far as the time period on that, and I can actually buy more PayPal. Initially, when I did that, I'm like, yeah, I'll buy more. It's stupid valuation. It makes sense to just roll out those options effectively, is what I'm doing. But getting the tax benefit because I had too many gains this year that I wanted to offset. Good problem to have. They have disappointed me in a few ways here recently, and I think the biggest thing is it's things at PayPal always take longer than expected, and it seems like even under Alex Chris, who I think is doing a good job, still taking longer. It's a colossal size company, a lot of growth factors. They've also not done a great job, frankly, of they'll cast out like the vision when things are announced, and that's great. They do a great job on the announcement. Wish SoFi could do as well in that. What they've not done, unlike SoFi, is basically say, here is where we're going. Here's what the end picture actually looks like. People like myself kind of have to figure that out ourselves. That means that analysts are ignoring this name mostly. Like with some of the most bullish people on PayPal reduced their price target substantially last week. A lot of it was related to branded and comments at fireside chats. The CFO, the CEO, it just sounds bearish. It just does. Bearish tone, bearish rhetoric. Now, some of that's related to macro. They were some of the first, by the way, to call out and some of the macro weakness. And they related it to being a headwind to branded, which is the only thing that analysts care about right now. They should care about more, but that's all they care about. And when they issue a price target, if it's negative, it just kills PayPal price momentum. If it's positive, the market doesn't care. So if quarter four that they're not talking at all about Fastlane, they're not talking about stablecoin. They're talking about maybe agentic, but agentic is too far out to actually have meaningful revenue. Now, I'm a long-term investor, but I don't want to be like, oh yeah, 5 years from now, because we don't know what agentic for sure is going to look like. They're positioned very well for that, no matter who wins. If they don't end up talking about advertising, if they are not laying out, they talked about accelerating branded and needing to do that. A little bit of a surprise in quarter three in the earnings that they presented, their comments on branded. But if I don't feel like there's a key strategy there, that things continue to take slower and longer, I'll start probably reducing my position at that point. I don't think I'd fully sell out. I have mostly shares right now. It's always been mostly shares, but I do have some options still in my non-tax advantage account. We'll see. Now, I do think real quick that the stock has de-risked itself, that really what we're looking at, the worst case scenario for PayPal, is being range bound and it being an opportunity cost. That's exactly what it's been so far. It could continue to be as well. They're doing some things, actually quite a few things well. But yeah, I'm just going to say that first quarter is going to be a very important one. And I don't think, and they're trading like this for a reason. I was very bullish for that being the pivot point, and I think I was just flat out wrong. we'll have to see what happens early February.
Would you accept a job from Alex Chris if he approached you?
I would have to think about it. There was a position attached to the CEO's office, and if I wasn't doing what I was doing right now, and I love what I was doing right now, I would have been all over that job and so excited. And they may not have hired me, and that would have been fine. Yeah, they'd pay me in PayPal shares, and I would starve to death. So, but
I think you
I
just
would
shot
think
your
about it.
chance at that job, Roy. I think you had your chance and you just lost it with that sentence right there.
Yeah, yeah. No, it's been tough, but I would consider it. But honestly, what I have right now, even though I'm sure PayPal would pay more and better, I love my job. And at the end of the day, like I love what I do. I think it makes a meaningful difference in society. Versus PayPal, I think I would help them depending on what the job is, but probably somebody else could do just as well, maybe even better. So
Okay, 23 hours stock trading proposal. So this is going to go live in the second half of 2026, I think, or Q2. No, I think H2. Sometime in 2026 this is going to go live. Somebody in the chat will correct me. And what do I think about it? Not great for mental health, great for progress, I guess. I don't love the fact that the market closes at 4, but I can still trade, up until 12 minutes ago, until 8 p.m. I think it's going to be. I mean, look, man, like if you're living in a world where you can bet on everything and you're going to have tokenized stocks around the world, it's like this just makes sense. I think you should have just done it the full 24 hours instead of 23. Like, what is it 1 hour for? So we'll see.
So it's I have not, I don't know for sure, but when Webull initially was offering crypto trading, which crypto trades around the clock, 24 hours, they had a 30-minute window each day. I believe Robinhood had this as well at the time, although I didn't use that for crypto at that point. 1 hour for sleep, and they just needed that as far as technology on the back end. So when the eventually, I think this was an inevitability. Honestly, once they opened up post-market, pre-market, and aftermarket, and then they expanded to 24-hour markets with other competitors. The exchanges have talked about this. New York Stock Exchange will follow. They talked about this as well. And crypto already trades up 24 hours. So I think that there are some naysayers that are like doom and gloom and what this will do to markets and everything. Honestly, we're already there. We've lived through some crazy volatility this year in 24-hour markets. Bigger deal when NASDAQ does it, but it's not going to be a gloom and doom scenario. It's really good for, by the way, Robinhood.
It is good for Robinhood and partially SoFi as well, I guess.
A little bit, yeah.
And just
Although I took a screenshot of this. I don't know. You're not a SoFi user because you can't be. Let me pull this up. There was.
Talk about
I
this.
don't know if it's new. Well, no, that not that. But they. I've always kind of questioned how serious they're going to be about their invest product and platform, and the matching bonuses that they're out there. The referral bonuses, rather, are just absolutely insane. I need to look at what it was, but it popped up and I can't find the screenshot right now. So,
bro, YouTube automatically translating, like automatically dubbing us in Spanish would go so hard. With me with this mustache and you looking like Canelo's brother, like somebody is having the time of their life listening to us in Spanish right now. Just saying.
Sí,
señor. Okay. Look, what I will say about this is when I saw this news, I was excited about it. So I guess that means I like it.
DGen.
Exactly. Yes. Okay. Tevis regrets selling Tesla. I mean, partially, absolutely. I still have, Tesla exposure. I think the good part about it was I locked in a lot of profits. I could have locked in way more profits if I had held it. But I mean, look, man, it's always going to happen. Like it goes up, you're going to regret selling it. But the reason I sold it was because I wasn't sure that it was going to continue to go up over the next 6 months or so. And so I think that It could have very easily gone the other way, and in which case you would not have been asking me this question. And I think the only reason you guys are asking is because the stock is at all-time highs. So uh, still have Tesla exposure, still bullish on Tesla. I might even consider adding to Tesla exposure that I have. I haven't ruled that out, but it all depends on the actual like fundamentals of the company, how that's looking. And if you look at Tesla from a numbers perspective, they don't look great, but the stock is obviously trading at all-time highs from a narrative perspective, not necessarily the numbers.
Mm-hmm.
Yeah, would I consider adding? Absolutely. I'm not sure right at this moment, but yeah, I would definitely consider adding to Tesla in the future even further. Does Nebius have a board seat on ClickHouse? They do not. So ClickHouse spun out in 2021, and Nebius is a passive investor on ClickHouse. The board is currently their ClickHouse's co-founders and partners from lead investors like Index Ventures and Benchmark. Nebius does not have a board seat at ClickHouse. When do I expect Nebius to become profitable? 2027. Back of the napkin is what I'm looking at, Roy.
Probably 28.
Yeah.
What we've seen is a lot of the names that are in hypergrowth mode right now, they keep kicking the can further down the road. It's not because the execution is not there. It's because the demand is so extreme that they have underappreciated that. They've had to build out more, which means it's going to be taking a little bit longer. But could be wrong.
I understand you never want to fight regulation, but is it now a perfect time to accumulate out-of-favor solar and/or payment stocks? For me, I'm adding Shift4 and Enphase. Yeah, I think it's just a question of how long do you want to wait for that turnaround.
Yeah, I don't mind having some, exposure to turnaround names like that, and it's worked out for me in the past. Right now, that's PayPal. Honestly, PayPal is a large enough position. I don't want another turnaround play right now, or at least not a substantial one while I'm holding PayPal at this size. Now, if PayPal collapses to $30 a share and I'm crying and eating top ramen, then yeah, I'll have room to maybe have another turnaround play because it's just killed my portfolio.
If it's at $30 a share, you would accept that job in PayPal shares. I'm just saying.
Yeah, I mean, I don't know. It's already trading at a stupid valuation. At that point, they've authorized 67% of their float to be bought back, like in the next 2.5 years, 3 years. Give me a break.
All right, we have 12 questions to get through, and we want to wrap in the next 10 minutes because I'm starving. So sorry if we don't get to your question, but we'll try. Mm-hmm. Would you buy a potential Anthropic or any other IPO in 26? Yes.
Any of those names like that, IPO allocation, yes. Once it's IPO'd, probably I'll have to wait until the valuation falls back to reasonable.
Why VG over LNG?
I mean, risk reward. I really like the modularity of that business, and so it reduces capital expenditure overall. But the biggest thing is you can see most of these type of projects, they run way over in terms of cost, and they take a lot more time. VG, they have not. The biggest overhang with VG, beyond what's also affecting LNG, is the arbitrage stuff, the legal stuff. That's not going to last forever. And it's pretty easy. You can just look at the stock price that I paid this year, but it's pretty easy to see. And you can also, by the way, look at LNG and see what they've done in terms of revenue over time to get a very good idea of where VG is headed. So this is kind of like LNG will be fine. I think that this is a space that they'll do well in, and they'll probably be added to the S&P 500 sooner than later. But VG, I'm a long-term investor, and over the next 5 years, I think it's going to outperform. They'll actually, I think, end up shipping more product. Now it's maybe a decade plus out than LNG, just where they're positioned. And for whatever reason, I've asked some engineers in the space too, why nobody's copying VG yet. And it's because a lot of these companies are don't fix what's not broken. That's their mentality. VG is doing something new in a space where, I don't know, a lot of people that are in this field see it.
If you have not, you owe yourself a deep dive on APLD. At least listen. Thank you, Steve. I will see if I can find time to do that. Um, Not financial advice, but only on current news and own views. What is one stock you own you believe would do best in 2026? I
SoFi.
mean, you think SoFi is going to do the best in your portfolio in 26?
I think there's a very good chance. Yeah.
Okay.
I think it's going to double at least. And everything else that I look at, like Hims, maybe in the second half, but there's just more question marks on everything else versus SoFi. You can see the catalysts all like lining up like dominoes, and there's a bunch of them. So now things could shift, things could change this year. This time last year, we were saying Hims, the same didn't play out that way. So
Yeah. So I would say it really depends on the macro. If we have sort of bullish, uh, risk off environment, or sorry, risk on environment, and high beta names are flying, I would say BMNR from here because it's at $30, and we've seen $60 on BMNR before. So like that's a double built in right there, and much higher. I think once staking, and I think Ethereum is going to get a boost on that environment. If we have a risk off environment and we actually see the market falling as a whole, then I think probably SoFi, I guess.
I don't know there.
Meta?
Yeah, it's nothing will be fun to hold at that point. But yeah, BMNR would probably be the number 2 name in my portfolio that I would say. But yeah.
Okay, cool. Do you guys think that Tesla will eventually become a big time energy play? Yes, eventually.
Yeah.
Have you heard of Bloom Energy, ticker BE? Can I get your thoughts? So we did hear about this. We haven't had a chance to. I would love to do a stock tank episode on this. I saw the Money guys covered Bloom Energy recently. I didn't have a chance to fully listen to that episode, but I know that it's something that they're bullish on. I haven't done any of my own due diligence on Bloom Energy, but it's interesting.
Yeah, I don't know anything about it.
Okay. Why don't I own new? Because I can't own everything, bro. I think Roy owns it still.
I do. Yeah. Yeah. It's great company.
Mm-hmm.
And honestly, like for Tevis is more of a degen. There is geopolitical risk, but outside of that execution risk and even competitive risk, they just blow people out of the water. They're an amazing company. So it's not Tevis likes more risky stuff. So
Mm-hmm. Yeah. Sure do. Either of you in VG, Roy, this is you, bro. What's your opinion on VG?
Well, I've sprinkled it in here and there. I don't know enough yet to do like even like a short thesis, not short, a small condensed thesis, but maybe in like a month and a half, 2 months, I'll put something out. But yeah, I think that their approach in that sector is novel. They're going to do quite well, and the legal arbitrage stuff isn't going to be an overhang forever. And they're trading too cheaply, or like frankly, right now, it can still be dead money, and just because it's a very cyclical space, and there's a lot of catalysts, which I think are probably priced in, which are going to put pressure on LNG itself. Not referring to the stock, but the space. Liquefied natural gas.
Matthew is saying, "Are you hangry? We don't mind you eating on stream. I've done that before. I don't think we're in the market that's good enough for me to be eating sushi on stream. All right. If we're in a better market and I'm feeling more upbeat, then you guys get to see sushi on stream. But that's not what we're in right now. Do you still think SoFi will be under 25 end of year? Yeah, Matt and I have a $500 bet on that.
Oh yeah.
It's at 26.50 right now. I think that if we do get a pullback, it could definitely pull back under 25, but I think that there's a nice like floor at 25 because it's bounced off of 25 ever since it passed there like in September, October time period. So I think I'm going to win that bet is what I'm saying. I think it's going to be a little bit closer than I would have liked for it to be, but I think ultimately I'm going to win that bet.
I am so glad I left my price target at 25. It's just like, oh man, it feels good. Now I'd love to just be humiliated and it's trading at $40. I'm like, wow, how'd that happen? Good Santa rally.
Yeah, I think my price target was like 27.50 or 28 or something. So it's kind of crazy how like we came in close and we made those price targets when this thing was like $12.
Oh yeah.
Can you guys like you, Steve, who's also streaming right now, and others sign a contract because it's so difficult to choose which stream to see. You're here, and I love you for that.
Yeah.
And we're gonna send everybody to Steve's stream once we're done, which will be momentarily because we only have like 6 or 7 questions left. But people keep asking questions, man.
Although, come on back if you're interested in the Robinhood prediction event, the AI day as well. That's coming up in 33 minutes. I'll be streaming with Amit and Tanner in 23 minutes.
Oh, wow. Okay. That's great. Maybe I'll go on Steve's stream and just eat on the stream so I can also keep the dream alive. Okay, next question is price target for BMNR Jan to Feb. I would say $50. Let's go with that. $60. Final offer. At what point does automation stop being an efficiency tool and start eroding the very foundation the economy is built on? How would it do that?
He's basically saying, is it going to be more damaging to society than it is accretive? My response to that is basically it's the same as when the internet was new. People were saying the same thing, and overwhelmingly it's been accretive, though there are some negatives to it. And honestly, AI is the same.
Yes, what Roy said, which I didn't have a chance to listen to.
Yeah, I've got like an hour and a half answer to that too, but I'm not going to do that.
Yeah. How about HIMS at these levels? Do you guys think it's time to add? I mean, if you're bullish on HIMS, this is the perfect time to add because it's in the 30s. I think for me, HIMS is a hold, even at this price. But granted, my cost basis on HIMS is $22. So I'm okay holding it right here.
There are some yellow flags that we've talked about in the past. I'm still a holder, and that's what I'm doing right now is holding. It's not. I don't think it's a bad buy right here, but I think it might be dead money until maybe the second half of this next year.
Okay, that's interesting. How confident are you in Nebius achieving their revenue goals for 27? I would say very confident because go ahead, Roy.
Oh, I was going to say that's a you question. Sorry.
Yeah. So I would say very confident because there's still things that are not priced in. So for example, the European build out, all the US data centers are not priced in. And the fact that they've increased their guidance every single earnings, I think that what numbers they're guiding for right now for 27, it's going to look much better they're going to increase that guidance even further in 26. Especially because even in the last earnings, they said we see demand to be well in excess of anything we can supply for all of 26 and probably 27 as well. Like the CEO said that in the last earnings call. So I think they're going to meet and exceed. HIMS or BMNR to 100 first?
BMNR.
Yeah, at this point, BMNR, I would say. Have you guys ever considered UiPath?
Yeah. I've not looked at UiPath since 2023 when a lot of people were saying, oh, Palantir's already run to like $17 a share. It's time to sell that and get into something else. And they're pushing Path. The process mining, like is mostly process mining, or a lot of it was process mining at that point. I understand that they've built and done some things since then. I don't know what those are, so I've not seriously looked at it. But I always think that I think the main reason why people are looking at Path, and you may be different, and I know that I know at least one person that's actually done a lot of due diligence. is just because they're like, oh, it's an AI play that hasn't run as much, and so they're just looking at an valuation rather than what the niche is that the company actually does and whether it makes sense in the future for long-term growth. And so, yeah, I've not done homework on it in 2 years, so could be completely wrong on that name. Maybe they've evolved far beyond what they were before, but they look like a decent tool. And compared to Palantir at the time, which Palantir is trading at a egregious valuation right now, they just didn't compare.
Mm-hmm. Yeah, I'll also knock this one out as well because it's the same question. Thoughts on Shift 4, just really quickly.
Payments, so it's same problem as PayPal.
Great. I don't own it. I don't really have an opinion on it. How confident? So, okay, guys, don't ask the same question twice. What's for dinner, Roy?
I made chili. My daughter helped me make it, and it was delicious.
Yeah, I'm probably gonna have like some chicken and rice or something that I can make that's quick. Nothing appealing, guys, unfortunately. Are we Amazon shareholders? Not yet, but I will be eventually. And I don't think Roy is either.
Nope, never have been.
Okay. Did we discuss Waymo? Yes, at the beginning of the show. And yes, we discussed the Avride implications. Roy, thoughts on dumping PayPal for SoFi, asking for my wife?
It really depends on how the Q4 numbers, or not just numbers, how they guide, how they talk in quarter four earnings. Myself, I'm happy with the sizing of each position. I have more SoFi than PayPal. If I didn't, I would probably sell some PayPal and buy SoFi.
Cool. Most DGen thing each of you have done this year. I'm not going to say that on camera, bro.
It's illegal, so he doesn't want. No, just kidding.
It might be. You don't know.
I'm not a very DGen guy, so I don't know, like vertical spreads on BM&R.
Yeah. Santa Rally, yes, no. Yes. Yeah. It's after the 25th is when the Santa Rally starts. It's 26th to the 31st that week. So just keep that in mind, guys. Okay. Thoughts on PayPal? We did a topic on this. Would you sell out of your Nebius position if they said that there's going to be a delay in data center buildouts, or would you hold? I'd probably hold because they're in a state right now where demand far exceeds supply. And so if there's a delay in them being able to meet that demand, that doesn't reduce the demand. The demand is still there. They're just like not able to realize that revenue and service that demand as fast as they want. So it's not great, but it's not a thesis breaker because the demand is so strong. I'm in Toronto.
No, they said exactly. So GPS coordinates, please.
Yeah. I'm not going to do that either because I love you guys, but not that much really. Okay. For Roy, why are you not interested in Amazon, Roy? You just think it's too slow for you?
I mean, we looked at the valuation, and maybe 3 years from now, but I keep kicking that can down the road. It's in the mix of a company that I would consider investing in, but exclude Apple and Tesla for where it's trading at right now. Literally all of the rest of the Mag 7 look more attractive to me. I don't think it's bad, but and there's names outside the Mag 7 that I think are very interesting right now.
Thoughts on BMNU leverage? No bueno.
Leverage, yeah. I do have 100 shares of it, but it's
okay. I think I'm closing the window for questions, guys. You guys are gonna keep asking, and I can't answer fast enough. Now, what we are gonna do is we are going to send you guys over to the show where Steve and Matt are currently doing their thing. And Roy, what are we going to have our lovely audience say? Is he in a blazer? I love that guy.
VG to the moon? Or just ask, is VG going to zero? Just ask that. Matt loves when you ask if something's going to zero.
that's gonna get Matt talking for like an hour on VG. What I would say, and this is what I was thinking, because I want to say something to trigger Steve. So maybe we say, buy Nebius, you coward, because he refused to buy Nebius last week, and he said, it's good, but I'm not gonna buy it. So I think everybody should just say, buy Nebius, you coward, to Steve.
Yeah.
What do you guys think? You guys like that? You think that's gonna trigger Steve? I think that's the play, guys. So everybody, we're gonna go over to Steven Fiorillo's channel. Duck has tagged it, and we're gonna say, "Buy Nebius, you coward," and let him know that it's from us. Thank you so much, everybody, for watching Bootleg. We will see you next Tuesday at 6 p.m. Eastern. I'll see you all at Steve's.